like yesterday, we covered a lot of things. So right now, what I want to do is kind of like bullet point those. So bullet point would be kind of what we're talking here is um, it's thought process, right? How to see something. So right now, everybody understands support, resistance, bounces, right? So, but the way it's taught and literally in every, you can't teach it any other way, but it's like years and years of explaining support, resistance. It hits this, it's going to bounce. It's found consolidation for 4 days, it's going to bounce, right? And it kind of just becomes where it's almost like belief. You hear it so much that you just start to believe it. Like if there is a support and it is a support level that's been there for 3 years, right? It always makes me laugh when they're like, it's about to hit a support that's never been broken in 4 years. And I'm like, there's no money. And then it drops past it. They're like, oh, we're about to hit a support that's been for five. It's like the support's been there for 5 years because we haven't gone down to it. But it's the whole process of like the belief of how these trading 101 is supposed to work, right? And that when I say it, it's probably why so many people fail with it, because it's there's nobody contradicting or giving the information that the only time it works is based on market conditions. And that's really what matters. If you don't know what market you're in, then you don't understand why a bull flag won't work, why head and shoulders don't work, why support won't hold, right? It all comes down, the beautiful thing is it just comes down to flow, right? Cash flow. There's either cash coming in, volume, or there's not. That's why I say volume is king, and that's all that matters. So here I see, like, because I wanted to go in because I know you were looking at some things and you seen where Nikki was posting, right? So, and this is kind of like 101, right? And it's all right that she's posting this. It doesn't matter on that. It's because this is like life. This is actually perfect. Everybody, no matter what you do, doesn't matter if you're in my Discord, another Discord, people are calling out trades. All these things are happening, right? You're going to see something on TikTok. You're going to see something on some social media, and when all that happens, right, you're going to see someone post a chart, right? They're going to say something, right? So here she has a she comes in. I show you guys. You guys are on it, but Doge breakout is expected to go to 15 cents, right? Watch Doge, right? So that's kind of what we know. So then she posts a chart, right? So if we look at the chart, you can see here. So this comes from World of Charts FX, right? So it's a trading group, and on this, they're basically looking at it and they're going, okay. So what we have here, right? Basic 101 is they see this big dip here, but that dip doesn't really matter because that was an API attack, right? So the levels that do matter are basically as it starts to come down, these levels here, right? This is the level that matters because that actually had a bounce. Now, the retesting of that is what matters, right? So normally this should come down to here and then work its way up. So there was kind of a bunch of people got excited here. This must have been a really big order that hit, because then up here the sell orders just continued to just beat it up, right? And eventually the people who bought in at this level here panicked, and that's why you see this big dip here, right?
Right.
Okay, this is just human nature. Now, that was another limit order because somebody's seen this huge dip and they said, "Oh, I'm going to put limits there," right? And it banged, it went up, but the sell orders came in and it hit it again, right? So now it's stuck in this little buy, sell, buy, sell, buy, sell, and then people start playing this channel of buy and sell, right? So they buy here, sell here, buy here, sell here, right? And it goes sideways, right? But that's where the confusion is, because then they see these tiny little things and they're like, yeah, in May we're looking for this move here, right? Complete speculation, right? There's
Mm-hmm.
no, the only thing they can say is, okay, it's been here since March. It's been here since April. It hasn't broke this line, which means that the market's picking up. We can see that, you know, things are moving. So in May, this is going to run up. And where's it going to run? It's going to run up to here because that was the line that the big one went to, right? So really, there's nothing there for any type of real reasoning of that, right? But it's just, that's why it's called charting. And so when we look at it, yeah, it's going to, yeah, it's not going to be right away. It's definitely a hold for me. Yeah, so it's going to be a hold. My leverage is 30x. My stop loss is 9460. Right, so she's got some levels there. 9460. Um, yeah, so it definitely looks like it could come down a bit here. Um, guys, don't trade like this. Let it play out. Trip meaning go out sooner, right? So the whole thing here is that when you get these things, right, that what you really want to do is kind of like, you know, play into the reasons why things happen, right? We know what's supposed to happen, right? And that's where, from that part, the next part is basically going, okay, if we know what's supposed to happen, right? And you know, the chart's a certain way or this is a certain way. Once we know that, then we have to kind of like take a look. Is this also Doge? Oh, that's Bitcoin. So here's another charting thing, right? And Doge will follow Bitcoin, right? So here's another charting scenario, right? And that's why it's so. But I'm realizing that now that I'm actually spending time like pulling this information, I'm starting to understand like how the mental, because this is mentality, right? So you see they have their upward channel, right? That's the trend channel, and then they have the resistance channel, right? Because this is their channel. Now there is a middle channel that goes in between there, right? Because there's always the middle ground right there, and we can see that we're there right now. So it's either going to break through this and then retouch this area, or it's going to reject and then come down and it's going to retouch this area here, right? But as long as it doesn't break this trend, as everyone says, trend is your friend, then we don't have to worry about coming down to here and bouncing off this area, right? That's all speculation, right? So it's okay to do trading 101 and get speculation, right? It gives you an opportunity to kind of go, yeah, this, I mean, at least you know the trend, at least you know what's supposed to happen, right? When all that happens, right, you need to kind of like go to confirmation, right? That's kind of where the sweet spot is, right? Confirmation of what's going to happen, the probability of a breakthrough or probability of a pullback, right? Because that's all you really have is the probabilities of what that's going to do. So as we start to kind of roll through here, and that was what I was kind of looking like when you said you went in earlier about 10 o'clock, 11 o'clock. You went on that long, right? So let me see here.
Yeah, like 11:30 or so.
Yeah, so if we pull up the chart, right, and I'll just kind of pull it up and we'll go to like 11:30, right? And this is where you have to have the yourself set up to what's your trade? What's it? The 22nd? Okay, here we are. Let me see what we would have been in here. So Eastern time. I think I'm on Eastern time right here. What was your entry price?
Oh, mine is 97.57.
97.57. 11 o'clock today, so 97.57. So somewhere around here, 97.57, right?
Mm-hmm.
So now, you know, once you have your in there, because you have to, it's charts, and this is kind of where everyone, you know, like I said, I think now that I'm kind of like focusing on charts more, right? Because when you chart, what you're doing is you're charting out, you know, distance. You know what I mean? And
Mm-hmm.
you kind of like looking for support, resistance, and all that. And the more I kind of cover the charts, I'm starting to realize like I think it's because it's everyone's. It's so. I guess every time you hear support and resist, when somebody says support, in your mind, it's like saying it's going to hold, right? It's a word like we believe. Oh, there's support there, right? If somebody's like, "Yo, I got you, man. I'm gonna support you," you believe it,
Right.
right? So that it's that word that gets everybody kind of in there to where it is. So when you kind of look, and this is where you came in right there, that blue line right there. So now at that time, like I said, I was kind of like in the middle of I had a bunch of things come in, and I've been cleaning the house, and I was like every time I went to go trade, right? Because I wanted to get into a Doge long, but today all I did was, very simply, I just went to the 4 hour. And the minute I woke up today, I was like, all right, let me take a look at Doge because I wanted to get, to see where it was because I'm expecting it to run, right? So this morning when I woke up, I kind of went into it, and when I looked, it was, and these are the arrows last night we were putting in of what's going to push down, and then that push right there, right? So that's what we were looking for last night.
Yeah.
And let me see how that played out. Yeah, so we got those are the moves that we had in there. But when I got in this morning, I kind of was looking around, and 6 o'clock. I got up about 6 and 8. But when I got up, it was already the 4 hour was like maxed, and I could see that the trade that I was looking for. I was talking to Ed about it last night. Was a 30-minute pull down and a bounce. But then this morning when I looked, I can see that the 4 hour was going sideways across the 10 threshold, but the RSI was heading down. So I'm like, all right, no long here, right?
Mm-hmm.
I was just kind of like how quick it was. Then I was looking for the trade that we were looking to get, which is what we were talking about last night. Is we wanted the 30-minute, right, which is all this stuff right here. So this is where everything in gray is kind of what we were speculating, right? So this is what we drew last night. So we're looking for this to come down, bounce, right, which it did, and then the next trade after that was the 15-minute in here. This is the 15-minute down and out, down and up. Then after that happened, I told Ed, I was like, yo, the next trade, we can get into is the next time frame, right? Which is the same pattern that we just had. It just happens on a different time frame. So what I was looking for was the 30-minute to go up, and then the 30-minute to come down, which it did, right? Here's our come down, and then when it bounces, right, that's our long. You see? Now we haven't quite got there yet, but it's starting to manifest. So I want to show you two things here that are kind of ways to understand. So, and Ed was looking at. Remember that Ed last night? Remember we talked about this?
Yeah.
And we were looking for the 30 to come down, and then when the 30 bounced, would have been the trade that we wanted. So I'm going to put this here. And what I want to take a look at is to show you like how to um, uh, kind of have confirmation of what you're looking at, right, or what you're looking for. But that was the trade we were looking for last night. We were looking for. I'll make these orange. We were looking for the 30-minute bounce up when it started to head up, and um, the next 30-minute moon side, right? I'll put this to the side. So that's what we were looking for. That pull down, and then the next 30-minute up. So this right here, orange line, represents the first time that the 30-minute tried to come up. And then right now we are currently in the second move that it's trying to come up, right? Now, when that happens, because that's the trade I want to happen, this is the trade I want to get into. You guys can see the screen, right? You guys see the chart?
Mm-hmm.
Yeah, I see it.
All right. So when that happens, right, now what I need is, right, confirmation of what I want to happen happening, right? So this is where we were kind of looking at last night, looking for the 15 minute to do what it's going to do is we needed volume to start breaking the 10 threshold, right? So here you can see that it broke the 10 threshold the first time it went up. You see, good start, and then as it comes down, right, there's supposed to be a bounce here that starts leading into confirmation of value.
Wait. Yeah.
Right, and this is just on the 2 minute, right? Because I need to make this actually work, I need the 5 minute, the 10, and the 15 to have value. You see what I'm saying? I need the higher time frames to confirm the strength of the value. But if the 2 minute isn't doing anything, well then shit, there's no need to look at the 5, 10, or 15. So this does show. You see what I'm saying? So this does show that there's a 2 minute breakout. So when that happens, right? This is where I can turn around and I can say, oh, this has a chance, right? But now what I needed to do is I needed to, have confirmation to it, right? So I can slide down. Let's take a look at the 5 minute, right? So when I look at the 5 minute, you can see that when the 2 minute started coming down, the 5 minute wasn't above the 10 threshold yet, right? You see? So what I'm looking for here is for the 5 minute to bounce and break the 10 threshold, right? So somewhere in this gap here, I needed to break the 10 threshold, right? Because that's where I start to see that, okay, we're touching it, right? But I needed to break it, right? So think of that like kind of like your resistance. So when all that came about, as I start to gear up for a long here, it drops below the 0 line. So now that long is dead. See what I'm saying?
Yep.
So now at that point, I need volume to kind of like come back in. But at this point, I can turn around and go, oh, you know what? Where's my 1 hour, right? So we can look here at the 1 hour, and let me pull up the RSI. And this is why having these, these other kind of like rules in there, it just keeps it really, you don't have to outthink yourself here, right? So this is the box of the long. And one of the things that we're doing right now, because the market is building, right, is we're waiting for confirmation. And the one thing that we do is, as long as there's a green moon, right, that we can look for a long position, right? And right here, we're sitting on a blue moon. So right when this kind of like starts to think of a long, I can see that, as we go down here, this is my 2 minutes starting to, manifest down here. And I can look at it and say, oh, you know what? All right, looks like it's trying to make something happen here, right? The volume in the 1 hour is starting to do something. So if I want to know if there's going to be a 1 hour green moon, I can just go to the 30 minute and say, let me see if the 30's here, right? And you can see right here where this orange arrow starts that, remember I was talking about learn to pay attention to the gaps, right? So right here, this is the 30, right? So remember, I need a 1 hour. So I'm going to the 30 minute to get confirmation of what I'm waiting for is coming. Does that make sense?
The 30 minute?
Well, yeah, because I need a 1 hour to go long, right? At least a 45 minute and a 1 hour green moon, right?
Right.
So if that's coming, then the 30 minutes should be green before that, right? So when I come here and I look, remember this orange arrow here, this is where there was a possible first breakout. Okay? This is the second possible. These represent, right? And I'll just put them in there. So these are the 30 minute moon line up. So that's what that represents. These orange arrows are basically where remember the trade we're looking for, right? The trade that we were looking for, this whole thing was, I was telling Ed last night that when after the 15-minute trade happened, we made that trade and we made money on that trade. The next trade is the same thing that happened on the 15-minute. It is basically this. There is a push up of the 30-minute above the 10 threshold. Then we wait for that to come back down. When it bounces and starts to head back up, that's the next trade, right? So by waiting for
Mm-hmm.
this trade, we know what we're looking for. We're waiting for the 30-minute to head back up, right? So what happened here was these orange arrows represent the moments that it actually went up, not sideways, but you can see here that that next 30-minute is actually headed up there, you see?
Mm-hmm.
Right? So that's why we put the arrow there. And then the other one is here. We put an arrow here because that's basically when the next 30-minute, which is the one we're currently seeing, is starting up, right? So that's what these two orange arrows represent. They represent the the trade that I'm looking for, which is the 30-minute headed up, right? Now I have to get confirmation of this, right? And how we get confirmation is just volume. We need money, right? What's up, trusted? We need volume. We need money. So here at this point, I can see, okay, I need a 30-minute moon. It's heading up, right? I'm waiting for that to happen. But you see how big this gap is here? There's such a big gap on this 30-minute here that more than likely it's probably not going to happen here, right? I can just tell by that. But let's say we play it out, and like I said, we go look at the 2-minute to see where we're at. This orange line has the 2-minute break the 10 threshold, but the 5-minute doesn't break, and that's why we see that continuation to the downside. Right? That's what we just went over, right? We jumped over to the 2-minute. We took a look at the first orange line. We got great volume here. This looks really good. Now it needs to do its move, right? What does it need to do? It needs to break up. It needs to come back down and retest right here. And then it needs to break out. Now notice that it tried, but then it didn't have enough money. Right? The sell orders took it out. So that entire move went below zero line again, right? So that's a dead long. So now I'm back to the starting board of going, well that was terrible. So now I need the 30-minute to do what I'm waiting for it to do, which is head back up, right? So in that particular area, we got this continuation of the pull down. We can see it just goes sideways. And right now, we just printed at 15 minutes ago, we just printed the next 30-minute line up, right? This is important because this is telling us that this is the line to the upside. Nikki, we're looking at Doge. We're looking at your Doge charting. So this is starting to now, manifest again, right? So we're going to catch this trade in live time, which is good. So now to see if this is going to work, what do I need to do? I need 10-minute above the 10 threshold, right? So if I jump here to the 10-minute, you can see I'm not there yet. I'm nowhere near positive value. Worst case scenario, I need the 5-minute to be there, right?
Mm-hmm.
I'm not there yet. So this is still a weak trade, right? Because what we have to do here is we have to remember
Get above the 10.
well, yeah, but the whole thing is this: is you have to say the points in your head, right? The reason why we wait for volume to confirm strength and we are patient is because we use leverage. And leverage allows us to have two confirmations to add higher leverage to make up for what we didn't get. So let's say why I'm waiting here, right? Let's say I'm waiting here for this to happen. And Doge is sitting here, right? Let's take a look at the main chart. So
Mm-hmm.
let's say right now, if I'm looking at this, I'm probably saying to myself as a person that I could probably get into this trade right now. Okay? And if I looked at this and I was a charter, I could say, let me take a look. So if I got in here and it pulled back to the support zone, right? Remember support, that's what everybody says, support, right? Worst case
Mm-hmm.
scenario, if you're being smart, if you're an actually smart charter, right? You would actually pull the chart down all the way down to where it possibly could go, which is this trend line down. So if I was trending this down, right, then I would say that if it does go the opposite way against me, and it starts to move this way, the possibility is that it could, based on its trajectory, it could go down to here, right?
Yeah.
Now, if I know that, right, I can draw this down to here and go, okay, that's a 1.2% move, right? 1.2. So right out the gate, I know if I had a 10x leverage on this, right? That means if it did go all the way down to the worst case scenario, right, and it hit this level here, then that means that I would be sitting at the 1.20, right? So I'm gonna put that there. And this the reason why we're covering it like this is because I'm trying to get to where you guys, go through how you're thinking to understand trading 101, right? Once you understand trading 101 correct. I don't teach trading 101 anymore because it's just all speculation. I don't it's possibilities, right? That's something you do in the where you're charting out for an entire year or you're looking at things like that. And so what you have to understand is when the people who are teaching charting on TikTok and all the people that are going out there, they're not really explaining the true results of 101, right? You have to always, on the speculation side, you always have to, what was that called? You always have to put your speculation into worst case scenario. You cannot, and this is why when I you can if you think to yourself, all the people that you've ever listened chart, right? They never tell you that a Head and Shoulders, or they're talking about a bull pennant or a bull flag or whatever. They never say, well, don't forget that in this market condition, it's a 30% chance. Have you ever heard of that? Anybody?
I don't know. Come on, man.
No.
No, right? So
Well, I've heard it from you.
yeah, but I mean, we're talking about Calvin. Calvin's been charting on TikTok for 3-4 years, right? That's all he does
I can't stand that dude.
for hours a day. But he's never mentioned that, right? You've never heard him say that, right?
Nah, I was
There's
just watching him last night. And
yeah.
people were like, man, why you gatekeeping? Why you gatekeeping? He just, I don't know. He just like cocky, like an attitude. I just don't like it.
And yeah, it's just who he is. But
There's somebody out there for everybody.
yeah.
People like that.
Yeah. So there's not Calvin's not a bad person, right? He just he goes out there and he does the last couple years he's watched all the YouTubes, he's followed a lot of charters, he's every time he learns something new he brings it to his community, right? So he's out there doing the research, he's out there putting the hours, he's out there doing all these things. So it's not like he's just making it up. He's out there listening to everyone else that's better than him, and then he's bringing it to his community to share with you the things that he's learning. So if you're working all day and he's at home, watching videos for 4, 5, 6 hours a day, and you come home and he's like, "Hey man, for an hour, let me show you what I did." I mean, it's worth it. He's out there getting the data for 5, 6 hours, and then he gives you the bullet points for an hour. It's worth it.
Hey, he's a hustler, dude.
Yeah.
I've been watching every angle with this dude.
Oh yeah.
Like,
Yeah, that's
he's like,
that's the
get
thing.
my free DVD, and then not DVD, but
The ebook.
Download my free
Ebook. Yeah.
So then he's got your information, so then he puts you on.
He does a lot of things. I mean, he also has some marketing stuff. Yeah.
Yeah.
He's got a lot going on.
He's like, to me, he's acting like I don't know. I don't think he's as humble as he used to be. I guess that's.
Probably not. I mean, you start making some money, you change a little bit. But
That's true.
what I'm trying to say is that he goes out there and he gets all this information, but he's never ever said market conditions matter, right? And that's what the problem is. People don't explain that market conditions matter. Now, is this Doge looking like it wants to move here? Yes, right? If I was trading off of my knowledge, I would get into this long here, right? But see that's not going to help you guys out because I see all these things that are happening, and if you don't understand how to see that, then you don't know how to reproduce it, right? So what you have to do here is In trading 101, like I said, you have to pull down to the worst case scenario. You need to measure that out to see what your downside would be, right? Meaning if you did a 10x leverage right here and it pulled all the way back to that support zone, that trend line, it's going to be 12% negative, right? So, and we want to stay somewhere around 15 to 20. So the most you could do on this long is a 15x, right? Because then you would be pushing this to about 17%, right? Because your stop loss wants to be about 20. But to be safe, you always want to play in your favor. You probably want to rock a 10x, right? And that's kind of just how you decide how you make a trade. But now you're on the other flip coin is if I do a 10x and I need 30%, right? Or 20% gains. That means it has to go up 2%, right? So now you're in the position where it has to hit its double top, which is right here. So that ends up being feasible. You see what I'm saying? This is a possibility. This trade could make this 2% move on a 10x leverage and give you 20%, right? Now a 10x leverage is probably something you want to do with $2,000, maybe even $4,000, right? The possibility here is 20% on 4,000, right? So what is that? Two, four, six, $800, right? And you stand to lose 20% on that, right? Because your pullback could be a negative 20. And here you go on the 2%. What is that? 2%, so 10, 40. Yeah, that's what we're working on. We're working 10x's, right? So here's our 2% up. Here's our 1% down. So it's a 2-to-1 ratio, right? If it pulls back on a stop loss on a 10x, you're losing. If it does hit that, you're doing a 15% stop loss in that zone there. You're losing 150, $150 on 1,000. If it goes the other direction, you're making $200, right? So this is where you have to kind of like this. What we were talking about last night, having some type of, risk versus reward type of thing, right? And that's just so in your mind you can decide whether this is worth the risk, right? Because if it goes down on a 10x leverage and it hits this level here, well, then you're out. More than likely you'll probably survive this pretty easily. But more than likely, what happens is you're down 15% on your 1,000, so you're out $150, right? And then if it does go the right way, right? Now you're looking at the possibility it has to run all the way to that top double top area, and if it makes it up there, it's 2% times 2, which is 20%, right? So that's $200. So you're risking, right, $150 loss to make $200, right? So that's almost a 1-to-1 ratio. Probably not worth it. Does that make sense? Adrian, what up, baby? Adrian, how are you, brother? Mickey G, what's going on, man? So that's the one thing. It's kind of like, I think, putting all those little things in perspective will allow you guys to also avoid trade. So I'm probably the only influencer out here that's more about not taking trades, right? Where you guys are actually taking good trades versus trading. You know what I mean? Like, you have to kind of build a system of profitability, right? And if you're not trading a system that actually would make you profitable, then you shouldn't be making a trade. And so to say it like this, if you're entering trades that aren't profitable, that are 2-to-1 on your money, then you are basically, it's like going to work and doing a job that you don't get paid a lot for, when you can go do another job and get paid twice as much and do less work, right? It's just smart concepts. So here, this is the part of the beginning, is to where when you start to see it this way, maybe this will mathematically, right? Maybe this will kind of help people understand when they go to make a trade that they're making trades that are valuable, right? It's okay to lose 5 trades. out of 10. As long as when you win the other 5 trades, it's 2 to 1. That's the key, right? So this is risk and reward scenarios. And the thing about risk and reward is with charting 101, you can kind of see where that pans out. You can kind of see where that plays out. It's just what I showed you right here. The pullback possibility is this far pullback here, right? The winning possibility is it running up to its, higher highs over here, or if it becomes, longer and it becomes a longer hold, where are you holding it to? So for this to actually be profitable, we would have to run this up to where we would have to hold this for 4%. So now we get to the point where in order to get 2 to 1, we need to run this up to 10 cents, right? So that's where you'd have to say to yourself, is it going to 10 cents? Some people think it's going to 15. If we go back to the big dips that everything's out there, we can see like in the last week or so, is it possible to get to 10 cents? I mean, we did hit 10 cents on the big peak right here before it fell down. So there is a possibility that this could get to 10 cents. Because that is a massive wall of resistance that we can.
Can I chime in for a sec?
Yeah, go ahead.
Well, one thing I was thinking for Joe specifically, because I know you're getting a little frustrated and just from in terms of like missing entries and stuff. And VC, you can correct me if you can just correct me if you disagree with anything. But one thing I was thinking is that a lot of times when you do get like the confirmation of a 3-minute green moon or 1 minute, 2 minute, 3 minute, 5 minute, like sometimes, especially if you're on like Doge, like 10x leverage or even 20x, like you might not be buying the exact bottom like resistance of a 15-minute candle, like timing the exact limit of that. Like sometimes you can long the breakout, like you can buy into a bit into a green candle on the 3-minute, and or maybe like 25% of what you're totally gonna of what your total trade
Oh,
amount is
you
gonna
want
be.
him?
So if you're
You want him to do the
$100, you can put in 25%
right
of that
cost
on the
average?
breakout, and then when it dips below there, then you buy in a little bit more. Um,
Yeah. So
anyways, I was just
yeah,
thinking that about like it's very tough to try and grab the exact entry. It's good to look at those
and
levels
yeah. So
of
you're
support to
talking
like
about the 4 entries or the 3 entries. So what we used to
yeah.
do is because sometimes guys would be so this is a technique that we would cover to try to do 2 things. One is guy in order to actually get you know through your emotions, you have to place trades, right? In order to get the data, you need to place trades. That's why we say if you do a trade,
Right.
do a $50 trade, do a $20 trade, but do 10 trades the same way and figure out a step system that you can get. So a lot of times guys would be like they would be waiting for the perfect entry so they wouldn't get their entries in. And it's like, guys, that's why we're only doing $10. You want to get in there to kind of sign to see how you build. Now, what we did was we said, hey, okay, how about a 3-piece entry, right? So let's say that, and what this is what Young's talking about. So let's say you're sitting there and you're going, okay, I'm gonna do a $100 entry, right? And you turn around and you say, okay, what I'm gonna do here is I think this is an entry point here, right? So let's just take this trade for example. So let's say I want to do $100 on the Doge right now, right? And for whatever reason, I decide that right now that it looks like I don't wanna miss this trade, right? So the very first thing I do is I say, okay, I'm gonna enter here, and all I do is I put an entry point here, and I say, okay, here's my first entry, right? And I'm doing $100 total, right? So this is number one entry, I would do at this point here, I would be doing 30%, or sometimes up to 40, but 50, but we'll just say 30% of my entry, right? So this at this point I'm doing 100. So this right here would be $30 of my entry, right? Then from here, now that I have my entry point, I want to calculate my pullbacks, right? So as it starts to pull back, for instance, depending on my leverage here, right? I would calculate my leverage to say if it pulls back. So just for um, normal purposes, we'll say that we're doing a 30x leverage here, right? So when this pulls back 1% to here, that means my negative at this level here would be, I would be negative 30%, right? So what I want to do here is I want to, cost average buy into here. So when it gets down to normally what I would say is probably around 40%. So it'd be right around this area here. This would be about 40%. And then we would place another order here. And then this would basically be, the first order is 30 bucks, right? The second order, because it's pulling down so far, would be a little bit more than that first order, because you want to, you want to cut this. First of all, you want to cut your stop loss in half, right? So your 30 bucks here, you're negative. If you add another 30 bucks, you're going to pull this price, your average pricing, you're going to bring it and drag it down to the 50% mark, somewhere in here, right? So that becomes your new entry point. That makes sense? It's kind of like cost average buying. So here's your next order here, right?
Yeah, kind of like what we're doing with XRP's 7X trade.
Right, right. So then this would be your second entry for $40. And what that does is it cuts your stop loss, or your negative that you're down. It cuts that in half. Right? Number two entry. And now your true entry becomes this piece here, right? So then from there, you're on the same scenario. Now you're 70 bucks in, right? So at this point, if it does take off from here, right, and it returns to your original entry, right? Remember, you were down 40% here. If it returns to its normal entry, which is simply going back to where you started, then you are up 20% on the trade. Where's that on this keyboard? Do 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 do. Right, that's the beauty of that, right? Because you were negative 40%. You bought that down to negative 20, right? So in reality, when you get back up to where you're going, you're essentially getting back to where you're in profit, because you're buying up the dip.
Instead of having to ride that all the way back up negative, your entry is like almost half of what it used to be, or maybe more than half.
Exactly, because this line down here, this area represented when you were basically 40% negative, right? So when you went 40% negative and you bought that 20% of that dip from here.
And it's kind of like what I'm doing right now. I'm trying to get my limit to hit, but it came within like, I don't even know
centimeters.
What number. I mean, so close.
Yeah.
Yeah.
So
I'm sitting here watching. I'm like, oh, come on.
So that's where right here, you can see that by doing it like this, what happens is if it returns to your entry point here, now you're up 20%, right? Now the whole point of the trade, right, and this is knowing your targets, the whole point of the trade basically is, if you have a $100 trade and your target is $30 because you need to make 30%. Now when you bounce back in here, remember you're at $70 here. So in order to get where you're going here, this 20% just has to do another half move up to get to your 40% line. right? So your 40% of your 70 is your target zone, right? So it just kind of like it allows you to get into a trade and then not worry about the pullback because you're already expecting a 40% pullback if you made the wrong trade, right? And then if it even goes further down, you still have another, you know, $30 entry that you can enter at the next 40% line. And then when it goes back to its normal side, you'll actually be up 30% on your 100, right? So if it did dip down to here and it created another, 40% negative, what happens there is basically now that you're buying in completely, you're at $100, right? So now you're fully invested here on your third entry. And now when that actually rides back up, right? And this goes simply back here. So right here, you're 40%, you're buying into that. What that's going to do is take your price here and it's going to drag it down. It's not going to do 50, it's going to do a 25% move. So it's going to be somewhere in between here. And now your pure entry is here and you're at a move to your level here, which is back to your original entry. You've now made a 1% move with $100 and you're sitting here. So by getting back to your original entry, you actually made your 30%.
Right, that makes sense. But then my question is, so when I started this trade, I started it with 35% stop loss. And then when I saw it going to drop, I'm like, well, I'm just going to remove the stop loss, put a limit where my stop loss was. And then as I was going through the day, I just moved my limit down as it was dropping. And then I eventually looked at the heat map, saw where liquidation was, and I put it there. And I left it. And that's where it left me hanging right there. Like a movement.
So,
But
well,
then, okay, go ahead.
I mean, I guess what I was originally saying, I mean, it can be, it depends on the type of trade. Like if you're doing a 10x, like kind of longer hold, then yeah, then agree, average in slowly and you can move your limits and move your stop loss. But like, I guess what I was originally trying to say, I mean, this can also be a method. It can also be a method for getting into a trade. But like sometimes when you get, or not sometimes, a lot of times, like when Doge is about to run, it might feel like you're buying the top, not the top of a green candle, but like you're buying into green, which is like, like we've been kind of programmed to be like, okay, I need to buy the bottom of this red candle, so, or else it's gonna come down on me. But sometimes, like when we're talking about trading into the momentum, like sometimes you are kind of buying into. I mean, you don't want to buy the top of a green candle of a giant, candle, but like sometimes you can hit buy even if it's like not the absolute bottom of a red candle. If that makes any sense. Like you don't want to catch the falling knives. Like if XRP or whatever is dumping and then like you're looking for the support, like VC was saying, like you can't really count on the support usually because but once it turns back into a long, once there's confirmation that okay, this has the potential to bounce here, and then it gets the first green moon, 3-minute green moon, comes back down, then you wait until it gets another green moon, and if there's volume and all the other things check out, a lot of times you can get, like, that's actually a good point to enter even though you're not catching like the absolute bottom, like, and that's what VC was saying about using leverage is like we missed a little bit of the move, but if everything checks out that it looks like okay, this thing's going to go up now, you can get into a trade even like kind of in the middle of a green. if that
Mhm. And just
makes
using
sense.
leverage to make up for what you didn't get. So that's where
Yeah,
you know
yeah,
the
I get that part. But then what I was trying to get to earlier was when I had my 35% stop loss, and when you are like kind of dollar cost averaging, do you normally run a stop loss because if it's dropping, you're going to plan on putting limits in, or maybe you put your limits in and then you put your stop loss down below your limits, and that's what I'm
yes.
kind of confused.
Yeah, you put your limits in and then put your stop loss. So you'd put your stop loss at 55 and your limit orders at your 40.
That.
Yeah, because you got to have your, you still got to have, the problem with this type of method, right? And this is where, this is kind of good for a new person who is doing a $10 trade or something where they're learning entries because they need to make a trade to see how, like, to get through a trade, right? And you can only, see what you're doing or what you're doing. You got to get the data. You got to, you made a decision, you're entered because of this reason, this was happening, so you bought your entry, this is your entry point, you enter, you set a stop loss, and it's like, okay, and then as it starts to move, you're at a low $10 and you're normally doing 100, and you're like, okay, so if it goes down to here, I'm gonna buy that other, you know uh, $10 down. But see, the reason why we kind of got away from it was it's because it kind of, yeah, it creates a bad habit of thinking that you could buy your way out of a bad trade, right? Where the reality is that if you're trading into the proper trades, then you should be able to escape with a 15% or 20% stop loss, right? You should be able to get to where entries are clean, right? That's why I said the only time I would use this would be if there's making a momentum move and you're like, you're getting in, and then you get in halfway, and then as it starts to move, you wait for that little bit of a pullback just in case, and then you drop your other 50% in, but you're convinced that on the move that you're getting into is a good move, right? And sometimes it'll jump faster than you expect, so you would drop 50% of your trade in early, right? Even though you're kind of like waiting for that next real solid move to come in, you just want to make sure it doesn't rip on you, right? So if you're in 50% of the way and it rips on you, the rip will give you 100% of what you're looking for anyways, because it'll go farther than you expected, right? So that's kind of where, let's say that we're getting into a good trade, right? And we see that it's really building up, and we see it's like it's just starting to go crazy, and we turn around and go, you know what, I don't want to miss this right here. So then we turn around and say, I'm going to drop 50% of my entry here, right? I'm gonna get half of myself in right now, just because this is looking really bullish, and then we still wait for the what we're waiting for, right? Which is that's extra confirmation of whatever pullback what we're looking for, and that's where we drop the other 50%, right? Now, the reason why you can get away with this is because you're trading a very bullish trade, and if it pulls back to where you want it to go, you're getting a better entry price, and it's going to, pay off for you. But more importantly, if it just takes off and it rips off on you and it just starts flying, more than likely, if you were saying to yourself, okay, I'm going to get here, I need a 1% move to make my target, and then you get in 50% and it starts ripping, more than likely, with the momentum that it's taking off, it's going to hit that higher target point anyways. So the 50% of the $100 that you got in is still equivalent to it's still going to bring in $30, right? Even though you didn't get the pullback you wanted. But you could see that everything was moving so fast and you just didn't want to miss it, so you did half of an entry, and then you put the other half of an entry on where you're kind of waiting for the little pullback action, but the pullback never comes and it just goes crazy, right? At least you got half in, but now you're waiting for that extra percent, but it should hit it because it has the momentum to spike up, right? You just want to make sure you have your limits in there. But this is kind of where put piecing this together is that when you guys start to process the information to where having, charting 101 and then, understanding what the probabilities are, what could happen, what's supposed to happen, right? Once you understand how to use the moon indicator, you'll know what will happen, right? You'll know what's going on in there. You see how the 5 minutes breaking down again? This is gonna short again, right? There's no
Right.
value. There's no money here. There's no
I was
cash
about to
flow.
say, like, understanding the short side of that. Like, I was proud of, like, not gonna lie, because I've been trading like shittily the bus, as you guys know. Trying to keep it transparent, but like I was in that core trade earlier,
Mm-hmm.
which and I was long for like hours, just like kind of like stop loss at zero, just like seeing where it went. And I got some profits, but like I could tell that it was like getting weak, and then like um there was a big time red candle that like stopped me out of the rest of my trade. And then like I let that bounce a little bit, but like I just got into a short like on
The bounce.
a little like on the bounce, but like didn't time it perfectly. I didn't buy the absolute, like it wasn't the
Right.
best
The
entry
best bounce.
ever, but
Right.
I was only on 5x leverage or something. So a lot of people are out there trading 20, 30, 40, like probably, I'm guessing,
Mm-hmm.
um, on that. But like I didn't get an exact like top of a green candle, but like it ended up dumping like 20% after. Like I just kind of held it. I was down 20-ish percent maybe at one point, but
Mm-hmm.
and then it ended up just because if you think of it on the short side, it's like people like I was long, and then it dumps, and then it pops back up, and then people are like, oh shit, I got to get out of here,
Yeah.
and then
Well,
it
yeah.
dump, and then so it's thinking about the concept of like
Yes.
why it's dumping and why
Well, what are
like
the people gonna do?
when I start to consider in getting rid of the hopium that everyone's just gonna suddenly start buying. Like
Mm-hmm.
I'm like, okay, people are selling, so I'm selling. I'm not gonna try and keep buying like
Yeah.
if I had looked at support areas, like literally did nothing. Like it just went straight through support. Like it just kind of, and then the moment that it did end up bouncing is like that's why like support is, you can look at it, but until you like,
Yeah. You
or for like
price
targets,
action.
but a lot of like, I mean, to me it seemed like, okay, this like VC said, like the big time traders try and get 20% or whatever,
Mm-hmm.
and it was like, or I think you said,
Yeah. Yeah.
and it's like right at that 20% mark, it was like, okay, now it's bouncing a little.
Yeah. I
So it's
mean,
kind of
big money's gonna leave the trade eventually, and they're not coming back because they have their ratios, right? That's what I was trying to like, you know, maybe looking at it, because the thing is that the one thing people do is they jump trades, right? They're very, and that's what I was just saying. Like I think you guys are, because trading 101 is always like support. Let's look at the support. Look at the support. Look at the consolidation, right? But that's meaningless, right? Because at the end of the day, the more that it hits the support and the more that it finds that those levels, the more those orders get filled, and eventually those orders are gone. And once those orders are gone, then it's ripping through those support lines, right? So it's kind of like once you,
VC,
what up, man?
what up? Hey, man, it's Lucas, guys. I jumped on this call just right at the right time because I wanted to talk about this. Like when the market dropped, like so many times VC posts or tells you guys we're topped out. The market's only going to give you guys so much. And I don't know if you guys were paying attention, but I posted the 1 hour and 2 hour RSI, and everybody was sipping on the hopium, like, oh, we're pumping to the moon. And I posted those charts and we were topped out. Max Johnson, I had the lines on there. I mean, the market's only going to give as much as it's going to give. And I never used to understand that. But
when I start really scalping the 1 minute, 3 minute, 5 minute, I mean, I'm going to the top, I'm going to the bottom, and
when you're looking at them higher time frames, the 1 and 2 hour, like it's just not gonna. The hopium's got to stop. Like if we are maxed higher than it's ever been before, no, it's time to take your
Accept it.
profits and run.
Right. You got to accept it.
Yeah, you just accept it, man. Get up, like that adrenaline rush. Okay, start thinking about going short. And I mean, that thing, that post aged pretty fast. It was about 10 minutes before the next 2 hour candle printed, and that market just dumped right when it 1 hour, 2 hour turned around 10 minutes later.
Yeah, and this is where we're just kind of like, and I'm glad you hop on, Lucas. We're getting to where it's like, how to, we kind of covered a shitload of stuff yesterday, but I was like, at the end of it, I went back, well, listened to the video, and I watched that. I said, the thing is that when you listen to YouTube and charting and people telling you how charting works, and you're sitting there and you see the Head and Shoulders work out, and you see, and because they get excited, look at the Head and Shoulders, and you see like the bull pennants when they do work, and you say, oh, look at the support, it's holding support, right? And it's like the words that they use are so convincing that it's like it's real. When you say, oh, it's going to hit support, in your mind you're like, oh, it has support, like you think that means some shit, right? But it doesn't, right? It all comes down to, is there cash flow or is there not cash flow for that support to actually exist? Because there's 7 other supports after it. So what makes that support the right support, right? And I just think it's just the way it's said. I mean, it's the words, support. It's got this, blah blah blah. And I think people just, like you said, hopium. Like they really they believe the words. They believe that support is support, right? That's what you want to believe. You believe when someone says, "Man, I got you. I'll support you." You want to hear that shit, and you want to believe that shit, right? So I think
This is the scariest thing. People start using that Luxalgo, and like you'll see on a 30-minute time frame, 1 hour time frame, and I mean you'll see Bitcoin. Oh man, or not big, but even coins. Like I mean, they're gonna make a 40 or 80% move in the next 30 minutes. Well, people are start sipping on that hopium.
yeah,
They forget everything that we're programmed to do. Like when we plug in our GPS, what do we always do? We click the fastest route, right? Fastest route possible when we're driving. Well, you got to remind yourself that the crypto market, it does move fast, but to get to those high levels, think about your GPS and going somewhere, putting in walking mode. Because by the time it makes that 80% move, it's going to make a bunch of stops 1,000,000 times all over the place before we even get there. You know what I mean? It just,
yeah, you have.
Luxalgo has those fancy targets, and everybody gets excited. But
Yeah,
I've been trading just on the regular RSI like crazy, and just going top and the bottom,
top and the bottom.
top
And
and the bottom.
what you want to do is use the moon line as the RSI as well, because then,
100%. I pair
yeah,
them together.
that's
Yeah.
it. Those two things are, one is the sentiment, which is what people are doing, and the moon indicator says how much it's actual, what's the value of it, right? So when you see things going in a direction, and then you look and say, oh, the money confirms it. You have to have confirmations, right? So what I'm doing now today was kind of about, not only, learning how to confirm something, right? But also like making trades that actually are valuable, right? Like why do a trade if you can't make your target, right? That's why we always say, we do the 30% club. You need a 1% move, 30x leverage, right? You need a 1.5% move, 20x leverage, right? But you got to have a trade that has that possibility, right? And that's why we have the steps that we do, where trading with the 4 hour up, trading with the 1 hour green moon, right? All these scenarios end up being the best possibility to get your result, right? Cause and effect. You need a 1.5% move, right? You need a 1% move, right? You need a 2% move. The only way to get that is to be trading at a time that it's actually like could possibly do it, right? So that's why I was looking at this Doge trade, and I'm like, you can't jump a trade if it's still the probability of it, even if you just did charting 101, I mean, the probability is it's probably going down to 9.5, worst case scenario. And then now you're looking at a, you know, a bigger percent pullback. I think something like a 1.28 pullback, which means that if you're going to play a stop loss, you can only do 10%. But then when it swings back around, now you need it to do a 3% move, right, to get your profits that you want, right? Because if whatever you're going to risk, you want that, you know, you want that 3-to-1, right, or two to at least a 2-to-1. You gotta start having the ability to be inside of trades that are delivering, you know, profits, right? You got to make a trade that makes sense, and this will kind of help you make a decision as you start to look and go, huh? Now this looks like a nice trade, but that's not going to hit a target that I want, right? This is why having those conditions of a one, or you know, at least a 45-minute green moon, 1 hour green moon for your trade. You can do longs when volume breaks the 10 threshold, right? You got to have those conditions because longs don't go where they're supposed to go if there's no money, right? So right now we're working off 4 hours because the market conditions are very light, right? There's not a lot of volume, so we got to trade in the, you know, 2-3 hour trading zones into the 4 hour movements so that we can get those little spikes, you know, kind of like the last hurrahs, you know, the last of the big orders come in, the FOMO areas, so that we can hit our target, right? We're trying to get we're trying to get 50% of the possible move. We're not even pushing to the top. We're limiting risk in there, right? So that's kind of what we're covering here is like risk and reward, right? So how do we, you know, that's what I want to cover for the next week is like how to build risk and reward trades so that you can, you know, you can understand this is a mathematical equation. You need to at least make 2-to-1, right? So that way if you win 5, lose 5, your wins cover your losses and you still double up. So that's where you have to kind of go ahead. No, go ahead.
Oh yeah, so me and Ed were going back and forth. We were talking about different things, and I told him the strategy that I've really been doing is the 4 hour, 1 hour, and 15 minute. And I'm looking for a green moon on all or a blue moon going down. It works for short or long. And I was showing him how I work into my entry just using the regular RSI and the moon indicator on the 1 and 3 minute. When and what I mean by that, I want the 15 minute, I want the 1 hour, and I want the 4 hour. They all got to be doing the exact same thing. Either they're all pointed up at the bottom, or they're all at the top. We're pointing down. We got blue moons, and it's like, okay, those three are working all together. Now we find the entry that I want. So then I'm bouncing between the 1, the 3, and the 5. No matter if I'm going long or short, but I'm waiting for the bottom or the top, you know what I mean, on the 1, 3, or 5 before I get on my entry. But I've been doing really well for longer trades, and I mean, you guys see me trade that fart coin all the time. The reason why I haven't barely found a coin yet that I can pull a 50% profit on a 1 minute green moon and get in and out. And I mean, I was going crazy leverage, but I even back down to 33 and I can still pull 50% profit. But that took me a long time. I mean, I would go through different coins, different charts. Okay. And I would sit there and measure, okay, this is what this coin does on a 5 minute green moon. This is what this coin does on a 1 minute green moon. And that's how I came to that fart coin. It's like, Jesus, this thing just goes every single time you catch it. You know what I mean? You got to have the right parameters, higher time frames, everything pointed up. You just don't want to jump in. It's not every time on a 1 minute green moon. You know what I mean? You got to make sure. I like to go at least a 15 and a 30 at the bottom pointed up before I'm jumping on the 1 moon scout or 1 minute moon scalping. You know what I mean?
So what is
that
the?
goes with the measurements. You know what I mean?
Yeah. Well, yeah, because you're kind of, you know, you're developing your trade in there too, right? So it's like, you're working your steps in there and putting yourself in that spot there. All right. So walk me through. All right. So right now, what you're doing is, let me grab this here. Okay.
I'm taking the 4 hour, the 1 hour, and the 15 minute, and I'm scanning coins, and I want all three, whether I'm going short or I'm going long, I want all three of those time frames to be doing the exact same thing. Either we're at the top of the blue moon going down, or we're at the bottom and we got green moons, and then I work my way in. You know what I mean? But if the 4 hour looks like it's going up and the 15 minutes pointed down, at the top going down, and the 1 hour, you know what I mean? All three have to be whatever I'm going for, short or long, before I start to enter the trade. Then I drop down to the 1, 3, and 5, and then find my entry. That's the system that I've been working. I've been doing pretty well at, and that's not like the fart coin thing. That's for longer.
That's longer trades.
You know what I'm saying?
So you're basically taking the 4 hour up on the. You're talking about 4 hour RSI. So you need the 4 hour up on the RSI, and then you want the 1 hour RSI to be heading your direction too, with the 15 minute.
And if you guys noted, I've been hammering that Ravecoin, that Pure Bird, Pi Veers, whatever the hell it is.
Pi.
Dude, I've been slamming like $1,000 clips, 3x guys, 3x, sometimes 5x. But I'm using that strategy, 4 hour, 1 hour, 15, and finding my entry. So yeah, it's all, you know what I mean? You look all flashy doing your 30, 50x, which I can do it, but man, it takes a lot of the stress away when I'm doing that 3, 5. You know what I mean? And I'll up my margins too when I'm doing such light of leverage.
Yeah, that's what. That's how you scale, right? Because that's what we cover all the time. Is once you find your trade, right, and you can hit those numbers. The bigger the bag, the less the less of the target area we need, and you can lower leverage to lower risk. Because you have a set amount that you're looking for, right? And that's where you stay in that zone, right? So if you're doing $100 and you're doing a 30x leverage, and you kind of master your steps, and you turn around and you make it a $500 bag, well, now you don't need that bigger target. You can lower leverage and lower the target space. So now it doesn't have to move as much as you've been letting it move. Because you got a smaller, you need less of a movement, and your leverage is down a little bit. So now your stop loss and all your range is even bigger. So you start scaling back, right? The goal is to get the goal is to be trading, a $3,000 bag and only need a 10%, move to walk out with your $300 for the trade, and do 1, 2, 3 of those a day, right? And it's basics, right? So that's kind of where we covered that we covered the scaling part. Kind of broke that down to where, the bigger the bag, you don't go bigger on a bag and then go bigger on the leverage. You go lower on the leverage, and you, instead of going for that 30, 40, 50% move, you're looking for 25, 20.
Here, I'm gonna post the clip that I did on Bitcoin. When I posted that, I just posted in the free chat. I put 20%, but I went big from the top. There you go, $1,700. Just 20.40%. I just posted in the free chat.
Yeah.
But when the 1, 2 hour maxed out, and normally I trade Bitcoin at a lot higher leverage than that, but I just went with the 20. But that was like an $8,500 margin. But I pulled my 20%. When I got to that 20%, I'm like, oh, dude, I'm good.
I'm good. Yeah.
But that $1,700, I'm good. I don't care if it keeps dropping. I'm almost at $3,000 today. I'm done right now. I got stuff to do.
Yeah, and so guys, just so you know, like this isn't overnight. So, Lucas, when did you come out to Vegas to see me, bro? That was what? Shit.
Oh, I don't even know. And you know what? And it's still, God, how long has it been? I don't know, maybe 4 months ago. But I had to build into my own. But still, to this day, even everything's finally looking a lot clearer. But I had to just put it all together. I learned so much. But now, me and VC are on the same page, but even more now.
Yeah.
You know what I mean? Before, I used to not understand when you'd be like, the market is going to give so much. When it's over, you know what I mean? It only has so much to give.
Right.
And you know what? I really learned that when I started really doing these scalps on Fartcoin, because when I'm scalping the 1, 3, and 5, dude, when say it's the 5 minute, when it's at the top, it's at you're done. Like
You're
take
done.
your money.
Yeah.
That's it. Measure your lines of what it's been doing. This is how high it's been going on the side in the 5 minute. I don't care if it's still a 5 minute green moon. Like we're maxed, and you can measure it on the moon indicator too. Okay, the 5 is higher than it's ever been, or 1 minute or 3 minute. Like
Yeah. There's only so much money.
Think about it.
And that's the part where this is why, guys. So you got to remember, like, we kind of, and Lucas was he was ready to go, and man, we were. I've been over here April. I think you came November, right? August, October.
Yeah, Yeah,
but
November.
What you guys got to understand is like when you do the one-on-ones, like it's a 3 days, but it has to be the follow-up, right? And the one thing about being in person is it's like when we talk or when you're trading, I'm watching you, right? And it's like and he would be in trades for like he'd get caught in trades, and I'd be like, bro, you were just up on that. Why didn't you like get out? And then he ends up on the other side, and like 4 hours later, he has to wait for it. But
no, my biggest problem was trying to hit the home run
every fucking time.
Like, hey, bro, how many times do you think I just compounded money? You see Farcoin, 34%, 33%, 35%. Dude, that shit adds up really quick when you're trading a $500 bag and you just did it 7, 8 times in a row. Like,
and you guys got to understand, this is not something that happens overnight, right? And this is kind of why I'm that's why you're seeing me change the trading course right now, right? Is because I watch. When people take a course with me, you're not, even though you're done with your course, I watch you as we move forward because I'm trying to see how to do better, right? And watching Lucas and watching him trade, I mean, we still had moments where he was being a trend. I had to send a random text, but hey, man, just to get him to like start to really like look at the man in the mirror, like, man, I'm giving up these fucking gains. Like I'm hitting doubles and hitting doubles, but I'm trying to make a homer, right? It takes time, and until you like, something has to click to go, all right, yeah, he's right. There's only so much money here, right?
And the biggest issue was I wouldn't even have a TP set. Like, I'm just going to ride it to the moon.
To the moon.
And then all of a sudden I could have 50, 60, 70%, and then I end up taking 20%. Like, what the, you know what I mean?
Yeah, because we had that talk. I was like, imagine all the ones that you didn't close at 50 and that ended up being 30. You gave away 30% 1,000 times in the last 4 months. And when you think about it, you're like, fuck, that's $300. Yeah. Like if you give back $300 100 times, I mean, shit, that's 30 grand. Do the fucking math, right? It's not.
So I'm adamant. I always set my take profits, and I mean,
you got to. You gotta have a fucking system of how to make money, because once you start seeing that happen, and you start seeing it add up, right? That's why we have a 30% club, because I put a 30% club because I got tired of motherfuckers getting to 60 and then back to 20. Take 30. Like, take the win, because once you do that 20 times, you're like, man, 200 adds up. You start to realize that shit, right? If you want to make more money, you don't have to go for more percent. Just increase your fucking bag.
Increase your bag, and you don't have to use the monster leverage. There's times to do the monster leverage, and it all depends on what I'm trading and what my strategy is for the day, what the market's looking like for the day. Like if it's shit, sometimes I just play with
market conditions.
I mean? Yeah.
You got to understand.
And whatever happened yesterday, like every morning I'm up super early and I'm scanning charts and I'm looking at Bitcoin. I'm looking what everything's looking like just to see what the ship is looking like it's going to steer. And then I start digging into coins that I'm thinking about trading. I probably spend a good hour kind of analyzing what I'm going to be looking at making money on today. You know what I mean?
Mm-hmm. Yeah, and he's really piecing it together. But if you guys listen to it, it's when he realized just to take the profits.
That's it.
Then he's like, man, now that I take profits, my bags are bigger. Now I don't even need 40 to 50%. I'm making $2,000 on 20.
When you realize
That is really the benefit to like understanding. And that's why I was kind of like saying the other day, I was like, maybe we need to be teaching this as if we are already trading $5,000, right? Because we started off where we take $50, turn it into 700, right? And this is kind of going back to Young. Young takes $50, goes to 700, and then you would say to yourself, well, man, if you could take 50 to 7, you should be able to take 500 to 7,000. It's the same concept.
Right.
But that's what he's trying to figure out. He's working on that part of the puzzle because that's what he can't make that
the
that move.
30% profits applies to stop losses too. Because
Mm-hmm.
if you've taken 50% L's, that also adds up just
Yeah.
equally as quickly as taking profits does. And if you take 50-60% losses or get liquidated, then you're screwing yourself in the opposite direction.
Yeah. And that's why we're focusing on like having, when and this is why I'm talking about risk and reward and putting in the, if this does pull back to its maximum pullback, what would I lose? Right? If that happens, then versus what I could gain, is it worth it? Right? So these are the parts, these are these working parts, but these type of, lessons come out when, you know, you get into a thing where the students like come back and like talk like, hey man, the shit works. Sometimes I do my own shit, right? And then they start fixing themselves, right? That's why I said there's trading 101 works a million different ways, right? It's concepts that are proven over time. Trading 102 is about fixing the mindset, like how do I execute all this shit in my head, right? And that's why I started like understanding why something happens and why there's only so much profit, right? It's because everyone else out there is already setting their profit takes there. So if they're taking the money, then why the fuck would it go up? Like you have to understand
Exactly.
that. You got to understand you're playing a game and there's rules to this fucking game. You get you I know
Lucas, do you
you have to stay in there.
Lucas, is there like something like have you had a day recently where you start losing, and like do you have that problem of like or like how do you deal with that, like, or how do you stop yourself from starting to trade like an idiot?
Okay. So all right, I don't want to I don't want to jinx myself right now, but like you're like, yeah, you got to have a 30% stop loss or you don't want to run into 50. Okay, if you're saying that, then what?
I lost you for a second.
What we? Oh, can you hear me now?
Yeah.
Okay, so you're talking about the 30% stop losses or not letting it run to 50. What we need to focus on then is your entries and being patient and like using there's so many different strategies you can use, but let's use that 15 minute 1 hour 4 hour strategy that I'm talking about. Well, even when I got all three of those are on board with what I want to do, um, and I'm looking for an entry on the 1, 3, and the 5, when they're not cooperating, once I finally get my entry on the 1, 3, and 5, before I enter, I jump back and scan through the 15, the 1, and the 4 because it may be a bit before I get my entry. So you got patience. Like I was saying, like we want everything to go as fast as possible. Our minds are trained. Like we want the quickest route. You know what I mean? But you have to be slow because it moves fast, but we have to be slow and patient before we enter. So, so what do I do? Say if I screw up, I normally I'll close my computer and roll like walk away, maybe 15 minutes. You know what I mean? Because the revenge trade, dude, that's the worst thing you could do. Like, worst thing you could do. Like, you move your stop loss. Say you're at 30, then you move it to 40, and you're like, oh no, it's gonna go to 50. We've all been there. Oh fuck. All right. Now it just took me out, but it's gonna fucking short. Now I'm gonna go short, and then it fucking goes up another 20%. You just want to take the computer and throw it at the wall. So, um, I mean, the best thing is if I dig in a bad spot and I get stopped out, but I am locked into my stop losses anymore. And a lot of times I'm setting stop losses not at 30%, like maybe 15, 20, because I'm
Mm-hmm.
pulling bigger bags.
Yeah.
And
That's what I've been. I think that has really been helping me in the lot. I mean, again, almost too early to tell because it's been like I'm still like testing it out. But I've been like trying like five on like my 5x leverage trades. I'm setting like 11 to 15%, and like usually the ones that run for like 200% or like those coins that just go crazy, like I can get away with that 11%.
well, just
And if it hits 11, then it's like okay, I lost like whatever $50 or something.
Discipline yourself.
Yeah.
Discipline yourself on your entries. And you know what? I don't know. Have you guys noticed on the BitNix screen on the top? There's a button that you press and it's break even. It always shows the dotted line of break even on your screen. Like,
yeah.
So I mean, I've got that on there, and I mean, at times, like I'll jump in and I think I'm on the right entry, and maybe I'm at like 5-6%. Like, cause I'm always shuffling time frame. I'm shuffling time frames like a deck of cards. I got 3 screens in front of me. I mean, I got my iPad. Like DC knows, I'm always looking
Yeah.
at everything. But at times I'm like, if I'm second guessing it, you know what? I don't even care. I'm going to slide my stop loss just over break even for the time being, because what looked great and I don't love it, because so many times like, oh, you know what? Maybe it'll go, and I got a 20% stop, but I'm in profit 5%. You know what? Fuck it. I'll take the 3% profit instead of hitting the 20% stop loss hit, and then we're gonna reevaluate things. You know what I mean? And that's getting
like
rid of
if you're watching
the hopium. You know what I mean?
Yeah, because like the point of that's kind of the other. Or I was like thinking about. I've thought about this, and putting into practice is a whole different thing. That's why I like teaching. Is trying to teach people is a helpful way of learning. But like, if you're watching a trade like constantly, then if you get stopped at your entry, then you're watching it, you can re-enter. Like you just keep watching it. Like that, there's no shame in that. Like if I'm like trying to get into a week long trade or something, then whoa, sorry, stepped on my dog.
Pucciano.
Hey, real quick, how do you guys get the trade durations to pop up on your thing when you post them?
There's just a little check. I mean, maybe I think it's like a recent update but it's on my phone.
Yeah, I know, like on mine right there, it just shows it on sometimes it shows and sometimes it don't.
I've never even seen the option to click it on, because I've seen that. But what sparked my interest on this is you said when I'm looking to get a week long trade, bro.
I mean, that's nothing. I rarely would do that. But I guess what I'm saying is like watching it like for like there's there's the ego involved with the as you were saying, everyone has felt that of like, oh, but what if it goes and it just wicks down, and then but I can move my stop. Yeah, but like if you're watching it and you're in profit, there's no shame in getting stopped out at your entry and then going and entering lower if you're there, if you're already. Yeah.
I think the whole thing is like, the one thing that Lucas is talking about a lot is what he knows. He has his strategy, right. Your strategy 1, right, is momentum. Strategy 2 is your volume, right. So he's got his 4-hour, his 1-hour, his 15-minute in the same direction, right. Now he moves to strategy 2, which is entry, right? So now he's looking for his value minus 3.5. He's piecing it together. But what he does is he knows, and he puts this into his work, his steps, is that right when he sees everything's coming together, he goes back to the 4, 1, and 15
Exactly.
because he wants to verify that everything is still, part one is still good, right? And that's where,
Because it may take 30 minutes when I'm shuffling the 1, 3, and 5, where I think,
right.
oh, this is my entry, and everything could change on the 15, 1, and 4. You know what I mean?
Yeah, because that's why kind of having. So what we're doing now is to kind of give you an example, right? So that's what I was doing now, Lucas. So what I'm teaching now, and we're kind of covering, right? Because I know sometimes you don't have a lot of time to jump in, but it's like this. So here's Doge, right? And we're kind of watching this. What we're waiting for is the 30-minute trade, right? Which is basically same thing Ed and I were talking about last night. Because after the 15-minute trade broke, right? The 15 broke the 10 threshold. It came back. I told Ed, I said, now we got to wait for the 30-minute to come back down, find support, and then we're going to ride that one back up because that'll be the next big move is the 30-minute volume coming back up to the 10 threshold. So you can see there's a couple fake outs here, but when the volume in the 2, 3, and 5 wasn't there on those moves. So now we just had another this orange candle here is basically um, the 10 trying to break out again, right? So we know that it's trying to break out here. So what we're waiting for is confirmation of the move, right? So what I've been telling everyone is you have to understand that by having value or having leverage, you can wait for this bottom, right? Because everyone's trying to catch the bottom, right? It's the hardest thing to do. But if you wait for the confirmation of the breakout, right, which is basically what most people are going to do is they're going to have a support and resistance area. There'll be a big push. Then it'll come back and retest that resistance, and then it goes for the move, right? And once you get into that zone there, you can add leverage. Like if you're thinking about a 10x and you see the confirmation doubles down, you can do a 15x to make up for what you missed, right? So what's happening on Doge here is we're waiting for the confirmation of volume and breakout, right? So here we go again. We take a look at the 2-minute. We can see that we're getting, here we go, we're breaking the 10 threshold again, right? Now what has to happen is it's going to pull back because there's still people selling, and that's why the volume is low, right? You guys got to understand the volume is staying low on the 5 minutes because there are sell orders that are still triggering, right? People are still, their orders are still there. So once the 5-minute breaks this 10 threshold, which it looks like it's going to do on this next 5-minute candle here, it's going to clarify in the next 6-7 minutes that we're starting to finally get the volume. So this next 5-minute candle should break the 10 threshold, right? Or it's going to hit it and we're going to see a rejection with the 2-minute to come down. And then we're going to get that next move up, which would be confirming positive volume is now returning. But all that really means, and this is something I've never talked about before, was in this area, right? To kind of understand, this area here is simply a sell zone, which means there's a shitload of people that have put sell orders in this area. And the only thing that's happening right now is that the volume and the money's coming in, but it's hitting these sell orders. So this whole area is just constantly getting ate up by the pushes. So we push up and we sell. We push up and we sell. What's going to happen here is that when the volume slowly starts to build back in, we're going to break through this sell order area. Once we break through this sell order area, then the next push that you see with volume is going to be the breakout that you're looking for. Now, once that happens, you're going to enter the second level of sell orders because people who bought at these lower levels here and have been cost average buying, literally kind of like where Joe's at, he's been buying down since 9758. So he's been buying all of these support areas over and over. He's at the point now, just kind of like the example I showed earlier, he only has to return to his original entry to make 20-30% because he's bought down all the way down. So that what that means is we're going to see another sell area, right? It's that simple. So when this returns to this area here, we're going to see sales come in again, and that's what creates, just like any real trade, you're going to see a bounce out above resistance, which is just literally the top of that last sale area where everybody's selling. It's going to return to the original entry that everyone was cost average buying from, which in turn will have them selling there because now they have reached their target. That will then bring us back down to the retest that most people look for. And now you're in wave number 3, right? Wave 1 was the breakout, wave 2 was the retest, and then this wave 3 is normally the biggest wave because most people who trade trading 101, they're taught and trained to look for a breakout, put orders on the retest, and then ride the retest, right? And if you understand that, you know that the retest when it comes down is normally the original move. It normally does the same move as the original, or up to 1.5%. So the original move literally would go like this. This move would touch here. It's a 1.52. Now you push that up to the retest, and now you have a target area. So now you know that it's looking to retest up to this area here, or 1.5% that, which would basically be, let's see, 1.5 would be another 50 through 60. It would have this level here, right? And we did this last night on the 15-minute move, and Ed hit his targets. But these are the targets that it's going to go to. Now we play the difference and say, okay, we're going to play the in-between mode and say this is probably where it's going to go to, but I'm going to play a little bit lower here, and I want to guarantee that I'm hitting my percent, right? So now I just have to measure that out and say to myself, is this going to be worth taking that target spot depending on where my entry is, right? So this is what I was trying to say earlier, is that by being patient, we know what moves I can take, right? So here if I measure and say, okay, let's say I buy this right now and I get in. If it's going to go up to this level, it's a 1.5. So if I'm doing a 30x, I'm going to hit my target. If I'm doing a 20x, I can hit my target. If this decides to pull back and go back to its bottom here, I'm at a 0.6 state, right? So if I'm doing a 10% on this move here, that's 6%. If I'm doing a 20, that's 12%. So that means right now I can set a 15% stop loss at this current position. If it comes back to this level here, that's 12%. I'm still good. And that's, so my 15% is actually below the current support area. So it should be good. Now, on the other hand, if it moves up and goes where it's supposed to go, which is pushing up to those higher levels like it's supposed to, right? If it goes up here into that sell zone, now I'm looking at, for my position, saying, okay, this is going to hit a 1% move area here, meaning if I'm doing a 20x, I'm probably going to get 20% out of here, right? So now I have risk and reward. My loss is 12%, my gain is 20%. Now I know the possibility, and if it pulls down a little and breaks out on that third move, I can get 30 to 40%, right? So now I have a 2-to-1 ratio, and this is where once you kind of incorporate this, and I'm going to do a little more videos on this so I can clean it up for you and kind of explain it where you kind of understand what I'm trying to tell you guys here. And once you clean this up a little bit, you'll start to see that the risk and reward is 2-to-1. So this is a trade that's valuable to me. So now that I know that this trade is valuable to me, I can then go into how do I enter, right? So let's just go to the basics and go over Lucas, right? Lucas wants to have a 4-hour in his direction. He won't take this trade because the 4 hour is not in his direction. The 1 hour is starting to move up, which means it's building momentum, right? So now Lucas knows that he's got a 1 hour up here, so all he has to do is wait for the 4 hour to show up. Now that could happen, you know, if you guys don't know how, just go to the 4 hour, right? And then just click on, make it a big pie, and just look at, go to where it's at currently, step 1 to the right, the next candle, and that means at 2200. So for me, it would be when my clock on my trading view says 2200, which is 2 hours from now. So in 2 hours, I will get information on the next 4-hour candle. Okay, it's either going to go up or sideways, or it's going to continue down. But that's a way that you guys can kind of like start seeing, speculating for yourself, where you can get information that can determine what you're going to do on your next move, because you have a system. He has to wait for the 4-hour to head up, so he's going to be waiting for that to actually like do that, right? So you could post that there and say boom. Now if you want to jump ahead and say, okay, I want a little more, maybe I want a heads up of what's happening, go to the 2-hour, right? Now you can see right here that the 2-hour is slightly bending. You see how it's, let me zoom in on that so you guys can understand. So if you went,
Well,
see right there is how it has a slight crook in it. So originally it was headed straight down like this. It has a straight arrow like that. See how it's veering up now?
yeah.
So that tells me that.
I wanna. So I don't use the stock. I use stock RSI for some stuff.
Mm-hmm.
But I'm a big fan of the regular RSI. And do you want to pull that up really quick?
Yeah, which one?
Regular strength index. That's it.
Right here, Algo Rider? Or this one right here? There.
Yeah, this now pull that up and go to the 30-minute, because I haven't been trading Doge that often, but looking at the 30-minute, I would really and because we just double bottomed. Like look at this big double bottom. You see that? That's juicy. Like I would be if I was looking to trade Doge. I have not been trading it. There could be a nice scalp right in play, but I would, if I was looking at it, I would have looked to enter on that 30 line on the regular RSI. I would have jumped on that with my confirmations on a 1, 3, and 5, and I would have used the same strategy, because here, this is where the market's only going to give you so much. Here, the market's only going to go down so much. Look at the RSI. We double bottomed. He's got the white line on it. Exactly, right there. And that's a move. And now if we correlate that in to the chart, watch what move it's going to make on this 30-minute. And I'm telling you,
It's
this is
gonna move.
bad because, yeah, it wouldn't go with my rule I've been following. But if I was going for a longer trade, I would definitely do that. But if I was going to do a high leverage scalp,
Well, let's walk through that. Walk through that, right? So here, what he's talking about is this. He has a double bottom so kind of what we went over was that's the one thing about the moon indicator, right? Once you start seeing what the value means on the moon indicator, you start realizing there are exhaustions on both sides of long and shorts, right? This over here, this heavy red, this is massive exhaustion on Doge, right? Now, if you're seeing something like this and you get a double bottom like that, that's definitely a big time right here. When as soon as this bounced up, I'm gonna turn this one blue because that's
a nice move.
That's a nice move. We would have ate that up, because that's like,
oh yeah,
there's only one way from there, and that's up, right? Now over here we're getting the same.
Moon indicator
most of the time.
That same move.
Yeah, it's gonna have that same area. So what we want to do here is like this. So just kind of like to get you up to date, is we have this here, and then now we have a double move here, right? So here we go again with another double move, and that's just basically playing into that. Now, once you have, this is kind of like trading 101, right? Once you kind of walk yourself through the 40 to 50 or 100 different ways that you've learned how to chart, and all these people showing you all types of charting shit, once you have all the speculation and probabilities in your head and you go, okay, this is what the fuck should happen, right? Now you go down here and go, okay, we're in a zone here. So there's no question that right now we got a double bottom in Doge on the RSI. He is telling you that he hasn't looked at Doge at all, and he's saying, okay, I would be looking at that shit. Now, if he incorporates the same shit that he's been looking at, which is waiting for his 4-hour, the 1 hour is already headed up, right? So this is going to be like, if he was interested in trading Doge, now he knows that he just has to wait for his basics. He needs the 4-hour to turn up here. And as long as the 1 hour is still going and the 15's going, he's going to take a trade on there, right? Now let's move it to the next section.
Yeah.
Yeah.
Let's see.
And then now let's rotate
Bro,
over
you're
here.
done for the day, bro.
I didn't say that yet. I was done earlier.
He's done earlier.
See, I started looking at juicy stuff, then I'm like, maybe I'll toss something out there.
But see here, so now for us, this is what I'm trying to tell you guys. So with all the what you need is confirmation, right? So now that I know that we have a double bottom, now that I know the 1 hour is heading up, right? I know that I got, and I see the 2 hour bending, it's getting a crooked neck. This all are signs saying that people are starting to buy. The momentum is the momentum is going to where Doge should be going long, right? It's exhausted its downside, and now it's going to basically, the only thing it can do here is go sideways, hit the bottom a couple more times, but this is your bottom little floor here, right? Now the moon indicator is going to be where you get your data to find your long, right? So if we looked at the 30, we need our 30-minute moon here, right? We want to ride this into this 10 threshold, right? Now as we work our way through here, in order for this just to be a long anyways, I go back to my 2 minute, right? Because I need my 2 minute to break my 10 threshold. We have that. Okay, this is confirmation that there's actually people putting orders in, right? So now I needed to withstand, and I needed to kind of move to the next level. So now I look at my 5 minute, right? I need my 5 minute to break my 10 threshold. It hasn't done that yet, right? So this is where we're looking for the confirmations of higher highs and higher lows of volume, right? Right now we've got our move up, it's coming down, and now we need to see how much it pulls down. If it goes to the zero line and starts to head up again and starts to build again, well, then we're getting confirmation that we're starting to, we get that movement we want, right? We're in no rush here to get where we need to get, because you got to remember, as we start to go through here, we still need the 4 hour up, right? We're 2 hours away from that information, right? The volume is going to confirm what we believe is happening, right? We don't want to speculate. We already speculated. We know what should be happening. Now we need data that it's happening, right? And this is where the volume comes into play. We need the 5 minute to break that 10 threshold, and we needed to start to move up there. But before that even happens, the 2 minute has to give us, that next move. It's got to break above here. It's got to move up here again. It's got to hold the zero line, right? It's got to kind of, be that. And that's why it's easy to kind of like, once you have that kind of rolling, now we're just at that lower time frame where we're just confirming the information that we know, right? Now, more than likely, I think it's, what time I got? 8, so 9, 10. We're 10 o'clock Eastern here. More than likely, we're getting to a low peak of volume in the market. Right, the Asian market hasn't been that great. So with that confirmation and with that information, looking at the 2 minute here, if it breaks below the zero line here, then I know that we're gonna the Doge is trade is probably going to manifest probably 5 a.m. Eastern time, right? It's going to come up in this next New York trade session, but by that time, that's going to give us another 3. So we got 2 hours to the next 4 hour, and then we'll get another 4 hour, and then by time New York opens, we're gonna have our third 4 hour, right? By then the 4 hour will be headed up, the 1 hour will be retested, and our 5 minute volume will be above positive, and we'll have a Doge trade tomorrow morning, either 6 a.m. or 10 a.m. Right? But once we know
So
that's
if you
happening,
see
go ahead.
for this limit that I was waiting for,
Mhm.
should I keep it where it's at 95.50, or should I move it up a little bit?
Well, so for you, I mean, you're kind of like, if we looked at where you're at, right? You got and you're
Yeah.
looking for 95. You have your other order at 95.50, right?
Yeah.
Let's see, 95.50. And that didn't hit for you? Oh,
95.50 didn't hit.
oh my God! Look, it tickled you at 95.54.
Dude, it was
It's so
playing with me.
close. Yeah, I'm looking at it.
But yeah, I mean,
Come
so
on, man.
I mean, I think you're good there because, like I said, we're not one. See, like we have bottoms, two bottoms. We have momentum. we have all these things that say Doge is along, and that's where charting and speculation gets everyone murdered, right? Once we have the speculation, which is good to have, we just go over to the moon indicator and go, all right, show me the money, baby. And that's the one thing it's not doing is like we're not seeing the money. Like we're getting these little perks of, hey, yeah, the sentiment and the momentum's here for sure. I mean, we're seeing it all the time on the 2 minute. But what we're not seeing is enough money to make it move, right? Because when we go to the 5 minute and we get ready to see a 10 minute, we're not getting there. Now, if we look across the board, we're kind of in the same scenario here where you're in this little down section here. So you're pretty much going to stay within this little piece here. I mean, if anything, it probably move your limit up to 55 because I think it went down to 54.
95, 55.
Yeah, because it's gonna be repeating that same pattern here because it's not breaking out. It's not getting the volume yet.
Yeah, I don't. Even though we got that double bottom like on the 30, you would have had to hit it right at the bottom because I got excited looking at that, but I mean, just looking at everything else right now, I don't love it. Just jump in, go long at the moment. Looking at like the 1, 2, and 3.
Yeah, but you still, yeah, you're still looking
hour.
for I mean, you're 4 hours, about 8 hours away, maybe 12. That's why I say probably 7 o'clock Eastern. You're probably gonna have some good here. You know, and it's
So
just
then, like,
it's just value.
If this limit hits, then my liquidation will be pushed down, and then I still won't have a stop loss. So should I wait to add the stop loss in, or?
No, you should put your stop loss below your limits because you got to have some. That's what I'm saying. You know, it's kind of like we got to get to where, and you're kind of already in this trade, right? So unfortunately, you're kind of like in there, but these are the trades that we want to just simply avoid, right? Because this is just an entry trade, right? If we go back to where you entered at 11 o'clock this afternoon, all of us would be like, man, there's the 4 hours heading down, right? Right there's a no long. There's no 1 hour green moon. So there's two things why you can't go long there, right? And the only thing that could possibly be a long would be minimum a 30-minute green moon, right? So like, and that's someone buying a like kind of like a dip of a dip, right? So if you were seeing all these dips happen and you were like, man, but you know that the sentiment or the momentum is a long, then you could go with a 30-minute green moon. You know what I mean? And what I wanna, this is kind of what I wanted Lucas kind of also do is when you see the move that you want, right? All you have to do is when the 30-minute green moon comes in, is say, okay, I'm gonna let you do your bounce, and then when you pull back, that's when I'm going to be looking for the third move up, right? Because what you want to do is you always want to be playing as if you already know that if there's a pullback, that's how you lose, right? So if you play the pullback and you expect the pullback and then you buy the pullback, well, now what you did is you took one of the bullets out of the gun already. Like that was the one move that could hurt you. So now if it comes again, more than likely the second time it comes, it'll be less. It's like a boxer. It's like Joey C was saying, right? If you're in a ring with a boxer and you know he's a powerful guy, in the very first round, you're an aggressive guy. But you don't just run up at him the very first round where he's hitting you in the body with all his might, right? You spend the first 4 rounds dancing around, letting him swing and letting him miss so that way he gets tired. So then in the 4th round, when you do get aggressive and he catches you, it was only 70% of how much it would hurt. You know what I mean? you want to take some of that first couple blows out. You don't want full force, right? That's what you want to do. When I say buy the tops when the short, buy the bottoms when you're going long. Be patient and wait for the pullback, right? Buy into the pullback, buy the pullback. Right? Because that's kind of where it's like the second pullback. If you're trading correctly with a 4 hour up, a 1 hour up, and you have these basic little steps that are already designed to protect you from a wick. When you do see and get a pullback and then you buy it, your odds of being successful have just doubled because you're buying the thing that was supposed to hurt you. You know what I'm saying? That's why, like, when you decided
Right.
here, let's just say, with this is just a concept in your head I'm trying to get through where it's having a checklist, right? So this morning when you got in there and you said, "Hey, I'm gonna get in this trade right here, 97.58," right? Let's go to the 1 minute chart. I just want you to kind of understand when you start to put these that's why I always tell you guys wait for the 1, 2, 3. So if you would have looked at this chart and you went to the 1 minute and say, okay, I'm getting in right here, 97.50, right? And all you did was just say, okay, VC always says 1, 2, 3. And you looked at this chart and you're about to get in. And you see right here that you are in a falling move on the move, right? So what you would say is to yourself is, okay, I'm going to get into this trade, but I'm going to get into it, after a 1, 2, 3. So you can see that you're actually in the falling first move. Then you would say, all right, I need it to bounce, and it does. And then you say, okay, here's the next fall, and that happened. And then you say, okay, there's the 1, 2, 3 of the current move, because I'm on the 1 minute. Now that happened, you could have bought anywhere here.
Right.
You see what I'm saying? These are basically the 1, 2, 3 is something you look at when you look at the 1 minute chart to enter, because what you're doing is you're confirming the current move, right? And at this time, this was kind of easy. Now, had you been like, if this would have been your entry here, could have been like, well, I understand, but no matter how let's say that you decided, you say, all right, I'm going long, I'm entering here, right? I would say to you, well, you're part of the first move up. So what I would do is, if I'm going long, I would at least wait for the second wave down, right? And then see what my third move, is, right? You'd be trying to buy into a third leg right there, right? So that's at least a concept
Right.
of saying, well, I didn't want to buy that, so I bought this, right? At least you would have bought the pullback to here, right?
Yeah.
When it's always letting those three moves play out. In this situation, you were buying in this section here, and what was happening at that time, if you were looking at the chart, it was in a current down move. So then you're like, oh, it's going down. I need it to bounce one time, and then here's its bounce, and then it needs to finish its third move, and I think it's almost done. Oh, it gave a little bit of green. Even if you bought the top of that green, it's still way better than where you're at right now.
Right.
That's why having these
So I guess then, for now, I'll just drag a stop loss off that limit. I have it at like 94.26, I think it is.
Yeah.
And
And
that should
and
be
then this
okay.
is kind of like, where we were talking earlier. I think where I think this is the point that Young was trying to make, that if he's in a bad trade and then he realizes it, and I think Lucas said this too, is that when you see the trade going against you and you realize you fucked up, just take your loss
Right.
and then regroup and say, okay, all right, I jumped that trade, I deserve that beating. So, but what can I do now? That's just like, and that's kind of what I mean, right, guys? I think Lucas was talking about that earlier. That if he's in a trade and it seems like even if he's up 4%, he's like, this isn't going the way I like, and then he just gets out, right? And then Young was talking about sometimes you're in a trade, and then he's starting to focus on just accepting his 15% stop loss, because fuck it, because it really just comes down to entries, right? If you fix your fucking entries and you start to enter correctly, that change, so it changes the data, right? Like, if you can't win a trade unless you are entering at a good time, right? Because that's the first thing you have to do is fix your entries. Part of having the 4 hour in your direction, 1 hour in your direction, 15-minute going in my direction, then looking for volume and then picking an entry. Even if you just had the 4 hour the 15-minute and the 1 hour in all your direction and you entered a fucking trade, you're at least entering with momentum, right? You at least have a somewhat opportunity to be successful. Now, the other parts of then using the moon indicator to find some volume spots, like, oh, the 3 is above the 10 threshold, the 5 is above the 10 threshold. Okay, this is a strong trade. I'm positive here. Now I can enter and I don't have to worry about a fucking wick taking me out. Right? Those are just.
Well, I just found one.
What? A
Siren.
coin? This guy's hunting coins. But that's what I'm saying is like, I think, the very first thing is fixing the entry. That's why I started saying, okay, if we look at how the pros trade, they're giving up a 1% move, but they're only doing a 1 or 2x leverage, right? 2x, 3x leverage. So in reality, that's a 10x to a 15x leverage for us, or 15% stop loss for us. So if we're playing within that format or that kind of mindset, our stop losses should be 10, right? And if you looked at a trade and you evaluated the trade and then you realized that if it did go down to the next support line, that would trigger a stop loss for you, then that's not your trade yet, right? So let's say that you were fixing to get Doge at that time, right? Real simple process. And you came down and you said, okay, I'm jumping in Doge. I'm going to get in here and I'm getting in at 97.60, right? And then you did a quick peek of the previous time and you look back and said, okay, let me see where there's support and resistance. Okay, I can see that there's a support and resistance right here. And I'm going to make this purple. And now, even if you were just doing the basic bullshit of support and resistance, and you said to yourself, okay, let me measure that real quick. So if I entered right now and this was my support zone that I'm in, that means that it would pull back a 0.24%, which is basically, if I'm doing a 10x, right, this will put me right here where I'm sitting at a 2 to 3% pullback, right? That's not too bad. So what's your leverage on the trade that you're in?
33.
Right. So now this 3% here, instead of it being 3%, right? It's kind of like now you got to multiply that, right? Because it's not a 10x. So instead of 3%, then now it's 10%. So this would be almost a 10% pullback, right? So you'd have to say to yourself, I want to be able to hit two support lines, right? What I mean by that is this. I want to be able to hit the next support line and then the following support line. All right, because I always want that double support because the first one doesn't mean shit. And I said, okay, here's my second support line somewhere in here. And just so you guys know, if you look at TradingView, they have these little square boxes. For some reason, I always go to like the little bottom of those boxes, like the lines that go sideways, because they seem to really like always hit those. I don't know why, but these are the areas that there are possible supports for this coin here, right? Here's this one here. Here's this one here. Here's this one here, right? 3 possible support areas, right? So if I'm measuring this out, I'm not expecting it to, actually make this first support line. So what I would do is I would measure that second support line, right? And say, okay, if I'm getting a support area, it's going to be this deeper area here, right? And I would measure that out. And I would say, okay, that this drops down, it's going to drop down to here, etc. I'm looking at almost a 0.4 pullback on a 10x. That's 4%. I'm doing a 33, so 4, 8, 12. That's about my 15%. I mean, I need that support to be half of my stop loss. See what I'm saying? So it's not a good risk and reward trade, right? So in order for me to like really get in this, my entry would have to be way down here somewhere. And if I'm thinking about the lowest support line here, this is a 15%. The minimum I can do is put an entry point here, because then if it goes all the way back down, I'm going to get stopped out anyways, right? But this is the areas that I would be thinking of a solid entry and maybe surviving if it did the worst case scenario, right? In this situation, it ended up doing the worst case scenario and taking you out anyways, right? But we know why that happened is because at the end of the day, there's no 4 up, there's no 1 up, everything was going down. So it was definitely a short position. But you see what I'm saying by having the calculations of saying, if I go to the next stop and it goes to the next one, will I survive that on a 15%? I don't want to be there. I want this to be 7% of my pullback, and then I have another 7% beyond that for safety. So this doesn't make the cut, right? Which means my order, if I was going to place this order, I would want this to be somewhere where I'd be sitting where it was half of my pullback, right? So if you're doing a 33x leverage, that means 0.5 would be 15%, right, which would be here, right? So if anything, if I was entering here and that was the support zone, I would want the support zone to be at least half of the 15%, right? That's where that is. See from the yellow line to here, that's half, and the other half is here, right? Half a percent. So 30%, this would be 15% pullback. So that means that no matter what happens, the best entry that I could do is right there. Does that make sense?
Yeah.
And so all I'm doing here is just kind of like giving you guys ways to kind of evaluate your entry, right? If you know that you're doing a 30% leverage, right? That means you can only pull back to, or 33, but about 0.46, right? That's going to be a 15% stop loss. So then if you mark that off and you say, okay, where's my lowest support areas, right? Which happens to be this one here. And you go down there and say, okay, I'm going to put that lower support area in the middle of my 15% stop loss, right? Which is right here. And then that gives me that extra 7% for safety beyond that. That means that my entry can only be 97.16. That's the best entry that I could hope for. And then what would have happened was it would have came down, it would have hit your entry. You would have hit right there. And it would have almost stopped you out, right? And then right now you'd be kind of in that survival mode. But that's just kind of ways to start thinking of risk versus reward, right? That's kind of what I'm trying to do is give you multiple ways to analyze when the trade is worth taking the risk, right? Because the real thing is that the bottom line is until you start to, and this comes down to you, right? Because the question that we would all ask right here, if you posted that, did you post this trade? Did you put your entry in the Discord when you got into it?
I can't remember if I did. I think I did, but I didn't post a picture of it.
Oh, so 96.35. Is that it?
Yeah, I think that's what the entry was.
So what's your stop? Okay, so you guys think I'm gonna take this?
I'll tell you in a second.
Yeah, just kind of post what your
entries at 95.50 or 97.57.
So that's where posting, right? And kind of just post the and that's where I want you to get into the posting side, because it comes down to like if you're going into Doge, right, and you're saying, hey, I'm entering 10-minute green moon entering Doge, and then you put your entry, but put why you're entering, right? 5-minute green moon, 10-minute green moon, and we all could look back, and if we were able to see that, and everyone said, oh, 10-minute green mode, and we see that you entered, right? And we'd see, 10-minute green moon, 96.35, I'm entering Doge, right? And we would all go, oh, and we take a look at that moment in time, and any one of us, that was at that moment, we could look at the chart that you just entered, and what we're going to look at is the green moon to see like what's going on, but from there, we would be in a situation where we would basically look at our steps. You know what I'm saying? Like we would kind of like do our walkthrough. So here you are right here taking this entry point, which is way up here, somewhere in this zone. And at that time, someone would go to the 1 hour because they know that, kind of the minimum for them is going to be a 1 hour green moon. So when they take a look at that 1 hour moment, right, and they see that you just entered, they'd be like, all right, here's your entry. They look and they go, shit, dude, you got a 1 hour blue moon. You see what I'm saying?
Yeah.
And they could post with you there and just be like, yo, 1 hour blue moon. Why are you going long on Doge?
Yeah.
Right? That's like the basic. We're not. This is without even looking for the 4 hour RSI, right? Now, someone like Lucas, if he was watching this, he'd go to the 4 hour RSI because he knows that the very first thing that he's going to do is he needs a 4 hour RSI headed up. So he would look at you and see this trade that you just made, and it's right here. And he'd be like, yo, bro, the 4 hour RSI just started down. So Young always wants a 1 hour green moon to go long. Lucas always needs a 4 hour going up. You see what I'm saying? And then at that point, you could have been like, yeah, you're right. This is not fucking good. I'm in a bad
And I
spot.
mean, having that 4
And
hour
somebody
confirmation.
did say that, I think.
Having that 4 hour confirmation is just so much safer. I mean, I don't find myself getting in those troublesome situations of getting whacked with 30 or some crazy stop loss because I'm
Wait.
waiting on those confirmations. Then I'm digging in on the low time frames to find my entry. And I mean,
So you don't miss those 4 hours of waiting for the trade to go the other direction.
No, I fuck all that shit.
Yeah, we were at the pool, eating fucking dessert, hanging out at the pool, getting tan in the hot tub. He's in a fucking room waiting for the trade to go the other direction for 4 hours.
Yeah, 'cause there's no outlets down there. It's all jacked up. But the dollar tacos, man. When I come back,
Oh.
bro, we're going to that place, dude. That's the best. The cheapest
Yesterday, bro,
food
$2.
I've
Yesterday,
eaten, bro.
Taco
Dollar
Tuesday.
tacos, bro.
Yeah, but that was.
Can't beat that.
No, them tacos are good. No, that barbacoa, boy, that's just fire.
Yeah, they're like speakeasy taco joint with the DJ
Yeah.
spinning, dude. That.
Yeah, Tuesdays, bro. That's our spot. The But once you kind of like, that's why we, as we go through this, posting correctly and when you do trades and why you do a trade is the easiest way to get feedback and also get perspective, right? Because somebody might give feedback and they might be, incorrect, we don't know until we see it on what's happening, because until you post what you're doing and why you did it, right? It doesn't have to be a long spiel. 10-minute green moon, Doge long, entered, 97.60. And then everyone else has their checklist. Is the 4 hour? Is there a green moon? Is the volume above the 10 threshold? I don't even know if that was there. To be honest with you, let me take a look at that. So if I was looking at that, to me, I'm a volume person. That's the only thing I really care about. So for me, I'd be looking at the 5-minute volume right out the gate. I think you were here. Yeah, so here's where this is the moment that you took this trade here, right? I mean, right there, we're negative. We're below the zero line. That's the only thing I would have said. Had been like, bro, your volume is below the 5 minutes below the zero line, heading down. That's why That's why doing the live trade was so important the other night, because I was showing you guys like as the momentum actually built. Right now, like we're waiting for this Doge long, but see once again. Look, the 5 minute, did it hold? Nah, it just broke down. We look at the 2 minute, we're gonna see the same shit. See, doesn't mean that it's not fighting to a long. It's going long in the next 8 hours. I'll tell you that much. So if you were looking to get into this Doge trade and you were doing a 10x or some shit like that, it's a pretty good trade to get into right now, because it's been consolidating on this damn fucking line and pushing volume for the last 12 hours, right? And the volume's actually growing, right? So every single time this little 95-70 zone is a buy zone. But the volume is where you need, you don't want to be trading. I think that's kind of the problem with learning like trading 101, support resistance. You become a speculative trader where you want to be a systematic trader. Right? I don't want to trade on probability. I want to trade on like, data, systematically. I want to see volume break a threshold, next time frame confirm the volume break, the RSI confirm the momentum. Now that I got the momentum and the volume both confirmed, now I move to the time frames that give me the best law of average, meaning that when they do what they're supposed to do, they move 2 to 4% every time. So I know that now I have an entry and I have a fucking target. I know exactly what I'm doing. I'm getting in and I hit my target and I'm getting the fuck out. I'm not holding to hope it goes long with hopium, and I'm not, you know what I'm saying? I know the move that's happening. Systematically making a trade. You just follow step by step. It's like baking a fucking cake, man. You just don't say, oh, you know what? I want my cake to be fluffy. I'm gonna add extra flour. You know what? I don't like flour so much. I'm gonna use less flour. Yeah, the cake ain't gonna come out the way it's supposed to come out. Systematically doing shit, and that's where we have to be. That's why I say, for me, I can sit here. All I need is the moon indicator, right? The momentum and all that other shit. I can look at the moon indicator when it does what it's supposed to do. I can tell you that you're 4 hours up. I can tell you that you're 1 hour's up. I can tell you all the shit that you're looking for is happening. Why? Because I see the money. When the money's here, all that other shit happens, right? Those other indicators are just ways to set alerts to give you more warning and more insight of what's coming, right? And as it starts to build, you're like, okay, it's building into what I expect it to do, right? That's where we have to kind of marry this, right? That's kind of what we're here for the next 4 weeks, is how to get this. And I'm glad, shout out to Lucas and Young jumping on. This is what we need. We need to find times you guys can come in more, because getting to where we can break this verbiage and kind of like build the way to look at something and then just dial in on it, right? And then that'll help all the other things, that'll help people develop their own scenario where they see things and it goes, that makes sense, right? For me, I just need to see the fucking moon indicator, right? If there's money, I'm long. If there's no money, I'm not. It's really that simple.
Yeah.
Right? But you have to get there until you like, it's got to be something that you can understand, right? Just like how people believe when they say, "Oh, it's going to hit support," and they all believe it's going to fucking hold it. Right? Support holds 35% of the time. Right? If you look at supports as they start to go through levels, you break levels of support all the time. And what do the charters say? Oh, well, it broke that support. We'll go to the next one. Oh, it broke there. We'll go to the next one. Oh, it bounced off, guys. But what? I'm always so confused on what that really means, right? I need to know. I need cause and effect, man, right? So that's why when you wait for the money,
Yeah.
that's what it is. Like right now, good time. Where this price right here, 95.70, right? 957 on Doge, a great buy right now. Because we see everything building, right? We know the 4 hours swinging around in 8 hours. We know we're looking at volume right now break the 10 threshold on the 2 minute consistently, right? It's beating it up. It's beating up, and what's going to happen here is going to buy the sell order, buy the sell order, buy. It's going to keep hitting those orders, and eventually they won't exist.
It's got to hit my limit though before it goes anywhere.
I don't know if it's going to get there, but it's there. You know what I'm saying? That's what I say. You're not in a bad spot here if you do like, sometimes like this is like maybe take close that out and then reset it with 20 with half of what you have, and then buy into this dip with 25%, right? That way
Right.
you take down a little bit of your position, right? Not financial advice, but just playing this. What you're doing here is systematically trying to make this a better outcome for yourself.
Yeah, I mean, had I
started it with $25 instead of 50, I'd be in a little better situation. I
Yeah.
could have just added twice already, and then this one would be like the last one that would hit. And if it didn't hit, then it would just go up, and I'd be in profit.
Yeah, and that's why I say I don't mind. Like, it's good to, like, we used to teach that system, right? But that was also when we were trading 100x leverage, right? And that system was to protect people from, not really having their entries in properly and being in those moments. But now we're adjusting to 30x leverage, where entries should be the main focus, right? No matter what, you should say, okay, I need a 4 hour up, right? I need at least a 1 hour green moon, right? And then I need confirmation of a move and then a retest, and then I'm getting in on that next move. I'm getting in on the third move, right? And the reason why we teach that is because fundamentally, the Elliott wave on the third move is normally the breakout. The third wave is normally a retraces to the same size as the first wave to 1.5 its size, right? So it just gives you where if you can get that fucking, if you guess, 50% of the time right on that third wave, you will get 1.5 on your pay side, right? And normally the third wave will protect you from the pullback to where you can at least get into an even spot. So you're just increasing your, your law of average of being successful by doing a 1 2 3 wave, right? So this is what we're trying to do here, is just how to protect you guys from getting into trades too early, and how to realize that being patient is actually the real move here, and waiting for extra confirmations is worth it, because all you have to do is increase your leverage to get what you're going for. And the reality is, now that we were talking tonight, and now like you got Lucas over here posting an $1,800 trade, $2,000 trade, because when he's making his trade, he's looking at it and he already knows that he doesn't need a lot to make 2,000 bucks, because he's sitting here on $2,000. He only needs 20%, right? So maybe, and this is why I like having these guys pop in, is because once we start getting data, we can analyze it quicker, right? The reality is the goal is to be trading $2,000 to $4,000 bags, where you only need 15 to 20%, right? If you have a $2,000 bag and you hit your numbers in there, turning your
I mean, 10% is $200, 20% is $400.
yeah. I mean, that's what I'm saying, right? So like right here, what was that bag?
8,500.
8,500.
I went big. I was strong.
Yeah, but see, that's the point, right? Like, it's
Well, I was confident. I was confident as hell in my entry. The 1 and 2 were max. Like, the market's only going to give you so much. How many times you told me that?
yeah,
And posted it.
yeah, and the market conditions are where it's at, right? I mean, as market conditions get stronger, that's why I was telling you earlier, like we're market conditions, we're about a 5, 6, 7, 8. When we get to 8, 9s, what you have to do is you have to wait for the market condition to be exhausted, have a pullback, and then let it bounce, because there's going to be a shitload of limit orders waiting for the pullback, and then after that fucking peak happens, then you short the shit out of them, because at that point the fucking that third wave down is stronger, because the orders have been already filled, so there's nothing in its direction, there's nothing in its way, right? So that's where kind of like having that systematic style, you start to you become aware of markets, you become aware of why, right? Once you kind of have that in your head, you're not fooled anymore. When it bounces, you're like, oh, it bounced. No, we know why the fuck it bounced, because there was a pocket of limit orders, there was a pocket of sell orders, there's a pocket of buy orders, and after it bounced, I bought it because I knew that those orders were filled, and now the next time that we push that direction, it has a twice, it doubled its percent of breaking through, because those orders went through, right? And that's where you're really like, you start to become one with the volume, right? That's why all we focus on is the volume, the cash flow. right? When you learn to be like to see the cash flow and realize it controls everything, then you can do an $8,500 trade, make 2 grand, and be like, oh, that was a nice little, 3 hours of my day.
But I wasn't greedy though, because I mean it got down and yeah, it went way lower. But I mean, hey man, I'll take that 20% because
Oh
it
yeah,
spiked back up. You know what I mean? You know what's gonna happen. So
yeah. And you got to realize like it's really about building that bag. Right now, it's like he's got $1,700 that if he's on the next trade and it doesn't go his favor, he's still even. Right? You got to kind of always remember you're hitting doubles here. You don't need the home run. Right? If you hit 20 doubles, right, you're gonna be well better. Your score is gonna be way better than swinging for the fence 20 times in a row. But that gives you the leeway that once that starts building up, then you see the how it builds, right? And all you're doing is it's the original way to wealth, right? It's like compound interest. Simple shit.
yeah, what built that trade was fucking a shit ton of fucking 30 to 35% fucking fart coin trades.
Right.
Really, if you want to think about it,
Yeah,
you
yeah.
know.
Yeah, taking his 30%. Then he's got 8 grand sitting around. He's like, oh, Bitcoin's gonna go down. So 30, 40 trades made 8 grand, and then one trade made two. Yeah.
And I don't normally trade that high in margin, but I mean, just I mean, we were just maxed out. It was like you just had that feel too. Everybody had that hopium, like, oh, Bitcoin's gonna go to the moon. Get the fuck out.
Yeah, it doesn't happen. There's only so much money.
Will one day, but not today.
Not today. But that's where it is, man. That's where it's like, getting the basics down to where it makes sense to you. That's why we're covering different ways to, maybe understanding risk versus reward, and if this trade is worth it. Will it hit the number? Can I make my 30%? Can I make my 20? Does it have the volume to do it? Right? So all these different things, but we're really just saying the same fucking thing. Trade with the momentum and trade with the money. That's
And you
it.
gotta find out what works for you because when I started using just a regular RSI, it's showing just like what the moon indicator is. For whatever reason, it's just crystal clear to me, especially for entries. And I mean, some people may feel that way about the stock RSI or just using the moon indicator,
Mm-hmm.
but really, I'm just using that relative strength index regular and the moon indicator, and it's just seeing those double bottoms like we showed on Doge, like that double bottom on the 30-minute, like when I'm running my 4 hour or 1 hour 15-minute system, that's what I'm doing on the 1, 3, and 5. Say if I'm waiting to go long, I'm waiting for that whatever the bottom was for that double bottom to hit on those 3 entries, and when we hit that bottom, then I go back to confirm 15 to 1 and 4 are still all headed in the direction all together at the same time that I want to go.
Yeah, and it's the charting side and seeing things the way you got to see them. All it really does is just allow you to, once you see the possibilities, right? Then you start digging into, okay, show me what's going to happen, right? I know the targets. I know what it wants to do, right? And like we say, when it doesn't do what it's supposed to do, then we know what it will do. Right? That's
Yeah.
the beautiful thing about that is that once you realize what it can't do, what it's trying to do, and it can't, then you know what's going to happen. Right? It's going to do the opposite. So that's where once these and that's why we're these type of days are good to have everyone jump in because we get perspective from different things, right? And this allows us to add these things, right? So Joe uses the RSI when he breaks certain levels, right? So if you've seen those videos we were talking about, I kind of show what we're talking about real quick. Is the RSI is used to where, for instance, like, and you might like this, Lucas. So what we do is we take the RSI, right, and then what we're doing is you have your lines, right? So this is the 50 line right here. So what we started doing was I noticed on high leverage trades um, that it only really paid off when the 50 line was broken, right, on the 4 hour. So like if you go here, take a look at that. So go look at your take your 50 line, draw that across.
I don't know why, but I'm still all I got is Doge. And it's like the screen's froze.
Oh, it might have froze up on there. But put the 50 line in there and highlight it, draw a line. You know what I'm saying? Put a line through there, and then
Yeah.
and then just look at your 4 hour and take a look at the coins that you've been trading, and see when it breaks above that 50 line. See how much those moves are.
Okay.
So we started using the 50 line as kind of like the volume line. Like not even thinking about going long on something until that actually broke the 50. Because that's when it had its maximum push. So take a look at that. That's just something we've been using. Like we do that because Joe has a high leverage one. So I was like, man, you know, if you wait for the 50 to be broken on the 4 hour and you do the same, you know, high leverage trade, your odds go up by, you know, they double.
Yeah.
So that's a little thing that when we do use a regular RSI. So we'll kind of piece on that. But yeah, I mean, so what times? I mean, because most of the guys are Eastern. I think I hopped on a day at 6, 7, 8 Eastern. And I think that's 7 your time, Lucas, right?
It's almost 10 o'clock here.
Yeah. So you're 10 at
So
9.
Eastern
Yeah.
should be 11 o'clock. Yeah.
So yeah, so what I want to do here is kind of on the Mondays, Tuesdays, Wednesdays, and Thursdays is get into a time frame, probably around this time where we hop on, and just you know you don't have to stay the full hour or 2 hour, but like take a 15-minute and be like, hey guys, this is what I was looking at today, and let me show you the trade that I did, and then that way, what we can also get from that is also like as you're posting and you enter something, it teaches people like, okay, so when you see this happening, this is this is when I entered, and then we'll start posting why we entered and how we entered, and then we can start finding a way that we all post the same, like Doge 1 hour green moon, and then next thing is entered Doge long 1057 on 10-minute green moon, and then we know why someone entered. We know what the trade you're playing, and then everyone else can look at it and go, oh, that looks like a good trade. I'm going to wait for the 30-minute to break the 10 threshold. You know what I'm saying? And kind of put their strategies into play with other information and data. And then we can come back around and have conversations like this and say, well, I saw the trade you posted about the 1 hour moon, and I know you went on the green, but there was a 15-minute broke the thresh, but I waited for this to happen, and that I'm normally getting stronger moves here, right? And then that way we can start piecing together on particular coins what might be a better scenario, being a little more patient, and then by having that, then that'll we can increase bags on those sides, have a more continuous data on like what percents we move, so we can have specific leverage and targets that we can actually go after.
Yeah, no, for sure, I'm game.
Yeah.
Later is always best for me. I mean I'm game with what you're saying, but I mean I guess what you're asking is when, or time wise, when.
Yeah. I mean, so for you, so just so you kind of have it, is we normally kind of go 8 Eastern, right, which is 7 for you, right?
Yeah.
So for you, when are you normally free? Because a lot of times the Eastern guys want to go a little bit later, because
and later's always good because my kids always got stuff by like 8 o'clock, maybe 9 o'clock Eastern. I mean, they're always done. Like they're playing softball and doing track.
All right, so so basically we can start thinking about 9 Eastern, so 8 Central.
Yeah, because I mean I'm always up super late anyway. So
Central. Okay, because I was saying like 8 Central or 9 Central, which would be 9 or 10 Eastern. So that works out. So later is better for you. Okay, so let's do that. Let's do the so Monday, Tuesday, Wednesday, Thursday. We'll have those sessions in there, and what I want to do is just the basic like kind of like, all right, here's the trade. This is what I looked at. Like a quick 15-minute breakdown of like particular trade, 15-30 minutes, just so guys can go, okay, I see. oh, and this is how you post it. And then we can be like, all right, when you see this, guys, post like this. And we can start getting that cycle in so they can take that information and be looking at other coins and be like, hey, this. And we know exactly what the fuck they're saying.
Yeah. No, for sure.
That way you have a whole bunch of people all doing the same thing. And then people can put their strategies into play and then say, okay, that happened, I entered on this, and this is why I did it. And then we have the information of why they did it. Then we can confirm, do you want the 4 hour? Do you want the 1 hour? It's the 45 minute. What stops that pullback? Did you wait for the 1, 2, 3? Right? And then once we start to piece that together and then go over the trade, we'll be able to actually simulate what's happening and make adjustments to say, okay, let's wait for this to happen. Okay, when that happens, wait for the 5-minute moon to reset. Right? Let the 5-minute go green, let it go blue, and then enter on the next 5-minute green moon. Right? Because my whole thing is always allow the pullback or what could take you out. Let that happen, and then once it happens, then you're aggressive because you got to avoid that first shot. And then as the market conditions change and we realize that our entries are actually so clean that now with better market conditions, as soon as it happens, we can just go because we're not getting those pullbacks anymore. So that way down the road in a couple months when things start, switching over, we can start adjusting to the market conditions, but we'll know why we're adjusting versus just, winging it. You know what I'm saying? Building systematic steps every single time. All right, guys, I'm going to stop this recording here. If you need to go, I'll pop this in the Discord. But yeah, that'll build a systematic for us, and we can kind of like just, understand why we do what we do, and that way guys it's not a guessing situation, it's more systematic. And then once you got that, and the other thing is trading as if we're trading, $5,000 bags, right? $2,000 bags. So that way you can just get that concept in your head. So you realize, okay, that's the goal. So if I'm going to be doing $2,000, $3,000, $4,000 bags, I need to trade this way, right? I can't take that risk. I can't jump a trade, right? I need to solidify. I need to confirm. I need to be patient because it's a difference between losing $20 and losing, 2,000, or losing $20 and losing 200, right? There's a big